What's going on, everyone? Good evening. It is 8:30 on a Tuesday night. Thank you all for being here. Chels, Lena, what's going on? PB, what's going on? Man, the chat is going right now. Are we going dark side tonight? Put it in the chat if you think I'm going dark side tonight. Let's see. Mark was down today. We got the Milk Gang Studio sign in red. Yes, I am on time. Unlike the other one, we're not waiting for people who we say we're going to stream with. We go live because we are not going to let everybody who is in the chat wait. It's just not happening. Not letting any of you wait. And yes, we are going dark side tonight. Absolutely. Chocolate milk is on the desk. Coffee on the desk. Water. The trifecta of liquids. We're ready. Before we go any further, please take a moment. It would be nice. I do have it up. I don't know why I'm not able to share it. There we go. Take a moment, read the disclaimer. I'm not an investment advisor, not an investment professional. I just do a lot of research. Please do your own due diligence. Take anything I say with a grain of salt, since it looks like I'm going to be by myself tonight. And, make good decisions. But please do your own due diligence. Just because I may like something, I'm just some guy on the internet. Don't take anything I say too seriously. We're going to go over a few things tonight. Man, this guy's really running late. We're not going to stall. I did go to the gym the past 2 days. I did not go today. I will be going again tomorrow and Thursday. I think I'm going to do 2 days on, 1 day off split. See what happens. I am feeling pretty good. Feeling pretty energetic. So it's definitely not helping me sleep at all. I'm still not sleeping. So I don't know. I just never really slept well. Who knows? Thank you very much. I'm glad that you guys liked the interview with Josh Brown. It went really good. He was amazing. I mean, class act, that guy, complete class act. So really good. You know, you're a little late there.
Sorry, buddy. Sorry about that. Pulled a Tanner.
Yeah. I mean, your names do start with a T.
I was just recording a video.
Sure.
And it ran late.
Sure. If that's an excuse you want to use, I'm for it.
That is the excuse I want to. It's the truth, Steven. All right.
You know what? If that's the excuse you want to run with, that's fine.
This is how you want to start the stream? This is
I'm just saying.
How you want to start the stream? All right.
Nobody knows what I'm talking about.
I don't think anybody does know what you're talking about.
No, there's only three of us. There's only three of us that know what I'm talking about, all right?
Yes, exactly.
So
correct.
Exactly, Lena. Excuses, excuses, excuses. Anyway. Let's just get into it. Were you able to look at the Hood report?
I was not. No.
Ooh. I was.
Okay.
I was, Tavis. So
let's do it.
Hood's down 7.5% after hours. I think the big reason is because they missed on revenue by $60 million, even though revenue grew 26.7% year over year. Now, I do not follow Hood terribly closely, so you can't ask me too much in-depth stuff. But I mean, I like the numbers they're putting up. I do need to run a new model on it, but when I'm looking through the deck, there's some things I don't like, but there's a lot of things that look good. I mean, for the year, total platform assets is up like 70% year over year. So definitely doing good. Should I make it a little bigger?
I saw their prediction earnings numbers. Those look crazy.
So total net revenue, you can't really complain about 52% year over year.
No.
I mean, they're not a young company. They're not a IPO. I mean, they are an established company by now, and I think that 52% is incredible. So adjusted EBITDA grown 76% year over year to 2.5 billion. Incredible. I mean, look, operating expenses are staying at bay. I think that it's really good considering they were able to grow adjusted EBITDA by 76%, but only expenses by 20%. That's great. What I didn't like, funded customers barely moved quarter over quarter. I mean, maybe that's not a big red flag or anything. It's probably not. Total platform assets, while they were up 68% year over year, they declined quarter over quarter. To me, that could say one of several things. I'm sure people will get mad at me because I'm probably going to get this wrong. But to me, there's not a lot of fresh capital coming in. And it's more, this is what these numbers tell me. I don't know this for a fact. Okay. But when I see this off the jump, it's people utilizing capital that's on the platform to grow it, not necessarily continuously putting fresh capital into Hood. Now, I could be wrong on that, but that's what this says to me. What about you?
Yeah, I mean, you could also see the net deposits there is lower from an annualized growth rate perspective.
Yeah.
But yeah, I mean, not a big red flag by any means. I know Hood's down after hours. I don't know how the call went. Honestly,
I didn't listen to it.
I think Hood just like normally tanks a little bit on earnings, even when they put up great numbers. So I'm not too concerned about it. I think you nailed it. Like, hey, 50+% growth rate across the board is nothing to be mad about. But yeah, they're going to come up against some tough comparable periods as well because they've been growing like super quickly over the course of 2025 with the next couple of quarters that they are reporting. But I think earnings or prediction markets is pretty bullish. I haven't fully had a chance to digest the earnings yet today, but I saw the chart for the prediction markets, and I think that's going to be really interesting as well.
I mean, event contracts traded was 8.5 billion.
Crazy.
That's crazy. Crazy. So bullish on that. By the way, Tevis,
yeah,
most people drink beer out of a pint glass. I drink chocolate milk out of a pint glass.
Well, you are a one of one. All right. You're a non-fungible icon. You're unique. You're a fucking legend. You're a rock star.
It is so refreshing. I don't know why people don't drink milk more. It is so refreshing.
Can you partner with like RFK Jr. or something and just do like a milk campaign? Make America healthy again and just, promote milk?
I mean, I'd like to see who can drink more whole milk in one sitting, me or RFK Jr.
I mean, you guys can do that, and then you guys could do like pull-ups or something, and it's a whole.
I mean, I'm not doing pull-ups. I mean, if I was a little younger, yes, I need to get in shape first, and I can challenge him to a pull-up contest. I'm definitely not banging out 15 anytime soon.
Yeah, well,
I guess I have no excuse. The guy's 70.
Do you think he's on something? He's got to be, man.
Yeah. I mean, I think he's on freaking peptides. That's just my own opinion. I have no idea. I want to go on peptides.
Testosterone for sure. But I'm talking about something, a little extra.
No, I think peptides would probably just be. I think a lot of people are on peptides.
Yeah, that's fair.
So this is interesting that private markets and family investing are priorities for 26.
Mm-hmm.
So private markets, very interesting. Let's see if they can really compete with like an Equity Zen or something.
Yeah. Wait, go back.
Sure.
Launch new markets, tokenize. Yeah, dude, he was talking so much about tokenization. Again, I haven't had a real chance to I've just skimmed a little bit, but tokenization was like a big theme. Can I play a clip for you real quick?
What from where?
From the earnings.
Yeah.
All right. Listen to this, Steve.
A little bit different how we're thinking about it. The EU is a test case for what Robinhood could look like if it was built entirely on crypto technology, on crypto rails. So we don't have traditional stocks there, but we have stock tokens. So that's where we're really pushing hard on tokenization. And I think you should see that accelerate this year too, because admittedly, the first version of our tokenization offering didn't have significant advantages over holding traditional stocks. But once we unlock the power of DeFi, then you get 24/7 trading. You get the ability to self-custody your stock. So you're actually seeing the introduction of advantages that are very difficult to replicate using the traditional rails, and some of the disadvantages, like things that people care about, like protection and things like that, we're going to continue to remove. So I think by the end of this year, you'll get to a point where the tokenized offerings better than the traditional offerings, which is going to be really exciting.
What do you think about that?
I think he's super interesting. I think he's onto something. I think it's super bullish Ethereum.
Exactly. That was my thought entirely.
Yeah.
I thought Ethereum is going to benefit for this. Absolutely. I mean, I don't know. Like, I don't see the entire thesis for tokenization right now. Like, why would people want tokenization, especially if the what was it? Is it New York Stock Exchange or NASDAQ that's moving to 24-hour markets? Like, you're not. It's going to be.
I don't want 24-hour markets.
Well, it's going to happen one way or another.
I know. Look at this. 4.18 million Robinhood Gold subscribers.
Yeah, incredibly bullish.
It's incredible. I mean, incredible.
Yeah.
I mean, they just hit 200 million in annualized revenue on this.
That's crazy. Yeah.
The real question is,
you still don't own this, right? Or you'd have some?
Dude, no, I don't.
What are you doing?
Waiting for it to keep coming down.
Come on. Where do you think it's going to come down to?
Well, I mean, it came down today, right?
I mean, sure, I guess. It's going to down after hours, but like $79. I don't know, man. Where do you think it's going to, like, what is the level where you'd be interested in buying?
Do you want me to run the numbers right now and give it to you? I have a model somewhere.
Sure. You don't have it top of mind? Like, what's the back of the napkin number?
I haven't looked at the back of the napkin number.
What are you even judging them at? Like peg or what?
Give me a sec. I must find a very specific spreadsheet. This is the problem when you're not organized. Here we go.
I wouldn't know.
I'm not. I mean, if you saw my Google Drive, you would want to shoot me. It is so bad. It is so bad. All right, I'm going to need some help with you. What was their total revenue?
Somebody said Tevis doesn't need milk in his life. He's already aging like milk, bro. Whoever that was, ban him. Ban him immediately. Jeez.
Why are you banning people?
Because they're telling the truth that I don't want to hear. I'm not prepared for this. Show me the chart, Steve. Let's get
All right. I just need a couple of numbers. What was their total net interest income for the year?
Bro, don't ask me this shit. I don't know.
Well, that's what I need to know. Net interest revenue. What the fuck is net interest income? What? Why are you laughing?
I don't know. I'm asking Claude. I don't know if it's going to have the details just yet.
I should just search the damn deck, right? That'd probably be smart.
Yeah, I mean, just ask one of the viewers. I'm sure one of them will know.
Does anybody know the net interest income for 2025 for Robinhood?
We're doing it live.
I mean, I should probably bring this up so I can show you what I'm building out so you can laugh at me, right?
Now Michelle's calling me old. Like, God damn it.
Like,
Anyways,
I want to see its valuation versus IBKR and Schwab. What was their operating income?
it
And I
says
don't want to hear get
Yeah.
fiscal AI.
it says 411 million. Gemini does
What net interest income for 2025?
Q4
Yeah, Q4, but I need 25.
full year. It says 1.514 billion. This is what Gemini's saying.
Say that again. 1 point what?
514 billion. I don't know if this is right or wrong, but
We'll roll with it. What was find operating income?
okay. Bro, I'm gonna build a Claude bot to just do this for you.
If you could, that'd be great.
Then you won't have a job anymore. No more spreadsheets for this guy.
And you would love to get me off freaking spreadsheets, wouldn't you?
Claude says that the operating income 2.094 billion.
Okay.
I don't know if these are correct numbers, but
We just need total assets and total equity now. All right, I got total assets.
total asset of
I have it 38 billion and change.
yeah 38.13, and
And
total
you-
equity is 9.15.
Okay. All right. I just want to see if IBKR reported yet and Schwab. So give me uno momento. They have.
Bro, I love how we have like 600 people watching you input stuff manually into the spreadsheet.
Yeah, I mean, this is how winners do things, Tavis.
Yeah. Chocolate milk out of a pint glass and just manually
Listen.
importing numbers into the spreadsheet. It's like Tuesday night, baby. Riveting stuff.
Chocolate milk is very important. Schwab has not reported yet, it doesn't look like, or did it? Hold on. Schwab did report. Okay.
How much milk do you think you drink a week, Steve?
Not a lot.
Like, ballpark it for me.
I have no clue, man.
Like 20 glasses a week?
I mean, who's counting?
The fact that that's not a no is crazy to me.
Who's got
20
time to count?
It's like 3 glasses a day, bro.
Who's got time to count those things?
I mean,
All right.
okay. If anybody's got time to count those things, it's you, man. You're importing stuff into the spreadsheet manually. Do you do any analytics about your life, like other than investments?
No.
No. You say that like with such a disdain, like you'd never thought about.
Can you find me total equity for Schwab, please?
Okay.
Because it's not in their damn press release.
For 2025, total equity for Schwab?
Sir, yes, sir.
Yeah, Dr. Gonzo says you should keep a milk spreadsheet. How much milk you consume on a daily, weekly, and monthly basis, and aggregate that, and then over the course of the year, and then we can get some nice stats going.
You know, if people are interested in that, maybe we can.
Hey, we can do infographics and everything. It's going to be great.
I mean,
Okay.
coming to a spreadsheet near you. What's the equity for Schwab?
Schwab, have they reported, Steve? They haven't reported.
They have reported.
Oh. Wow. Shit. Okay, so Schwab for I don't have it.
It's just not updated for some reason on Seeking Alpha. I don't know why. It's very annoying. All right, I just found it. 49.
49 was Q3.
No, it's 49,384.
Yeah, that was Q3.
It says December 25 on here.
Okay.
So, all right, looking at this, Hood still looks a little expensive. I mean, look at this. Net interest margin, IBKR slaughtering it. Operating margin, IBKR slaughtering it. You're trading less than 1 times for assets, and market cap to equity, it's under. I mean,
yeah, but like layer in the growth rate. Can you make another row for what's the growth rate, projected growth rate, or something like this?
I can update this.
Sure.
And change this out and do boom. Change that to 2028. Can you seriously get Claude to freaking do this for me?
Okay, hold on. Let me take a screenshot.
Because if you could get Claude to fill this out for me, I would be very happy because that will save me time.
Yeah, I think Cooper has a good point. You order the same stuff every week, so you can pretty much quantify how much you consume on a weekly basis pretty easily, Steve.
That's not exactly true, sir.
How much do you throw out on a weekly basis?
None. Throw out?
There you go. There you go.
No, but sometimes, I have extra, sometimes I buy extra. Just because I place an order doesn't mean that's what I leave the freaking farm with.
Do you pay cash? Do you pay cash?
No.
No, you pay with card?
Yeah, I freaking will pay for a stick of gum on a credit card if they let me.
Well,
I want those points. All right, so growth rate, you are right that over the next 2 years, so forget 26 because now 26 is the baseline year. Over the next 2 years, they got 39% EPS growth, whereas IBKR has 20%, but Schwab also has 36%.
That's wild.
I mean, I don't think Hood is that expensive here, trading it 25 times 2028 earnings. So I don't think it's that expensive on EPS level, and they may even be able to beat estimates. So maybe it is a good value here. I just happen to like the margins on IBKR better. But this is telling me that Hood could be a buy.
Yeah, and it's down 8% in after hours too. So,
Yeah, I mean, they're trading at 35 times this year's earnings, which is pretty cheap, in my opinion, for a company that's about to do 40% EPS growth over the next 2 years.
That's what I'm saying, Steve.
But at the same time, people are freaking discounting Amazon and Microsoft, and they're going to do the same type of growth. So why is Hood getting a multiple over them? I couldn't tell you. But as far as Hood, it's looking interesting here. Oh, wait. Why is this? Whoa.
What?
No, something's wrong.
Yeah, look, hold on. Can I share my screen real quick?
Yeah.
This is what oh yeah, the share price is wrong.
So I don't know why it didn't update when I opened it up. That doesn't make sense.
That might look even better.
Yeah, 25 times. No, it looks like all this stayed the same. It just looks like the share price just wasn't updated on the screen. Because all this is correct. So 25 times forward, 35 times this year. Hood looks relatively inexpensive, in my opinion, given they got 40% growth. Bring up your screen, I'll share it.
Oh no, I just had the Claude thing. Let me I mean, it got different numbers than you got, but let's see what it says here. Can you throw it up?
Yes, I can.
I didn't ask it to update the share price, so just give it a break.
Yep, of course.
Key changes from original table. And so it updated the numbers here. Based on extrapolated, most analysts provide estimates 2 years out. Hood's estimates show strong upward revision. That's the other thing to look at is like how many upward revisions do we have? Valuation, Hood is trading at 61x 2026 EPS, 51x 2027 EPS. So it's probably the most expensive by far on the list.
I mean, it's not. Hood's expected to do $2.46 of EPS this year.
Well, it doesn't say that, so I don't know where he got his numbers from.
I'm looking at it right now, according to 18 analysts.
Yeah. All I want to know is, are you buying or not buying?
You know,
you got to do people.
This has got me interested that I actually need to listen to the earnings call now.
There you go.
We're making progress.
We're at something.
We're making a little progress. I'm going to listen to the earnings call. Over 20% revenue growth this year. So the question is, if crypto comes back, what does it look like?
Well, I mean, I think crypto will come back, but that's also a factor for your bet. But that's also, I think, going to affect, I mean, maybe not Schwab, but probably IBKR as well. Do they have crypto? I don't know.
I have no idea. Schwab does not. I don't know about IBKR.
Uh-huh.
All right, let me ask you this. Hood or SoFi at these levels?
Well, I mean, I bought SoFi this week, so I think my actions say something.
I think SoFi has better potential in 26 than Hood.
I just know SoFi's numbers better, like I just know their business better.
And I don't know if that's a fair statement for me to make, but S&P 500 inclusion, I just think SoFi's got a lot going on for it.
Yeah. That's I think I would be a buyer of both, quite frankly, at these levels. I think under $80, Hood is with the numbers that they're reporting, especially with prediction markets and tokenization, I think it's going to be a good buy for the long term. Yeah, I like both.
Are you starting a position in anything else?
Nope, not yet. I ain't got no money, Steve. I'm broke.
Okay.
What
did you think of Nebius? What's up?
Nebius is reporting on Thursday, man. Thursday morning. I'm going to be covering it live on my channel. So whoever wants.
Did you see they're agreeing to buy the Israeli startup?
Yeah, I did. Yeah, it's going to be good.
What do you think of that?
I think it's going to be an interesting addition. Token Factory plus the search benefits that this new company provides. I think is going to add another layer. Like Nebius really right now wants to shift from a pure infra provider to a full AI platform. And I think that the software and the API layer will over time allow them to offer more differentiated and ultimately higher margin solutions, quite frankly. Like having these AI agents ready to run and also to validate will create this pipeline, right? Like you have this data layer and then you have a real-time web retrieval essentially. And then that can then create a loop with inference and training. So I think that's going to be really interesting for them. Ultimately, I think the market right now is treating them purely as like an infra play, like bare metal, and their speed is as fast as they can, develop essentially. But over time, the long-term vision is inference to have them be valued more on like an AI software stack level. And I think these acquisitions are strategic to help them get there. So I was bullish on it, 275 million. I think for having this new layer of the agentic stack to essentially have like real-time web grounding is not expensive at all. But at the same time, dude, it's kind of crazy to see where AI has gone, because like these guys raised a Series A that was $20 million in August of 2025, and it's a 30-person team. And it's like they went from Series A to getting sold for almost $300 million. Are you kidding me? For 30 people? What? It's like $10 million per person that works there. It's insane.
I don't own enough.
What's that?
I don't own enough of it.
Of Nebius?
Yeah.
Yeah, let me throw something up on the screen, and I think it's going to be pretty bullish.
Especially after we saw how much capex the hyperscalers are spending.
Dude, it's insane. It's insane.
Did I show you the numbers?
Yeah, hold on. I have the numbers in front of me. So 1 sec. Let me throw this up for all you Nebius skeptics out there. Let me read this. Nebius is now up 13% over the past 5 months. During that same period, they signed the $17.4 billion deal with Microsoft, a $3 billion deal with Meta. They raised the capacity guidance by the end of 2026 from 1 gigawatt to 2.5 gigawatts. They guided 800 megawatts to 1 gigawatt of connected capacity by the end of this year, 7 to 9 billion in ARR for the 2026 year. They signed Cursor, they signed Revolut, they signed Black Forest Labs, and ClickHouse doubled their valuation. So it's incredibly undervalued here. And then obviously, when you take into account the hyperscaler capex, that's going to be even more of a green shoot from a demand perspective for Nebius. So I think like we're going to see what they report on earnings, but yeah, I think they have a bright future ahead.
Yeah. Yeah, the capex is crazy. I'm just going to show you. Mine's not as pretty, but I have the data on it. And the fact that we're seeing acceleration for the past 3 years, year over year. I mean, in 24, 55% year over year growth. 25, 64.5% year over year growth.
Yeah.
And now the expected in 26 is 70.5% year over year.
Incredible.
It's incredible. It's incredible that these 4 companies are spending $252.5 billion more on capex.
Yeah.
And the crazy thing, I'm sorry, Bears, that may not be the peak.
Can you throw that back up? So I just want to put this into context for you guys. That capex for 2026 that you're seeing on screen, that's nearly 3 times the capex of 2024 and more than 4 times the capex of 2023 levels. We're seeing a parabolic move in the capex spend. And if the hyperscalers who have all the data at their disposal are spending more and more money on AI, then that just speaks to the overarching macro demand that you're going to see. And companies like Nebius, like Iron, and others are all going to benefit from it. The fact that capex is exploding, I mean, 27 is obviously going to be bigger, but over what, 600 billion in capex in 26 is crazy numbers.
I mean, think about this. So you got 55, 64, and 70% all year over year. What are the Bears trying to tell us? That capex is going to go down next year after coming off a 70.5% year over year? Capex isn't just going from 70% growth year over year to negative growth. That doesn't happen.
Yeah, agree.
So 26, not going to be the peak for capex most likely. If you had a bet on it, is there a prediction market on that?
Probably.
If there is, we need to find it. I would put serious money on that.
All right, let me find it.
You're the resident DGen. Please get Polly
I
up. I just don't see a world where capex is going to be less than 610 and 27.
Oh, less than 610? Oh man, forget about it.
Why? How bad of a bet is it?
Oh no, I can't. I'll look, but I don't know if I can find it.
Don't worry about it. We can do it later. But this is, in my opinion, super bullish for Nebius. It's probably super bullish for CoreWeave. I don't know enough about CoreWeave's business or IREN, but these companies are going to, they're going to do well. They are going to do well.
Yeah. What do you think for earnings? Do you think they're going to knock it out of the park or what?
I don't follow Nebius close enough. They should, with the amount that companies are spending.
Yeah.
You would think that they would. I'm just waiting for Nvidia to report. I think all roads lead back to Nvidia, and Jensen is going to blow earnings out of the water. And I think his guide is going to be crazy for next year.
Oh man, I need to figure out what I'm doing with my life as pertains to Nvidia, because I right now have the cash secured puts, and those are like in profit. So just to remind you, those cash secured puts were expiring March 20th. They're $200 cash secured puts, and I think my break even is like 175. So I got $25 or so from those. But now Nvidia, what did they close at today? Like 190 something, 188. So the puts are doing fine. I'm just worried that like by March 20th, after Nvidia earnings, like it's going to be over 200, and I'm going to make a bunch of money on the puts, but I'm not going to make a bunch of money on owning the shares. Sad life.
Well, the shares are so undervalued here.
Yeah.
I mean, look at this. EPS for 26, 27, 28. They're trading at 17 times 2028 earnings and 25 times this year's earnings. It doesn't make sense why this is trading at such a low valuation with 44% EPS growth over the next 2 years. It makes even less sense why Amazon and Microsoft are trading here. I mean, I showed Chris this last night. Take a look at this. Microsoft and Apple. They are $1 trillion market cap apart.
Yeah.
Yet, look at this. Microsoft does more gross profit, more EBITDA, more operating income, more cash from operations, more net income. How is there $1 trillion difference between their market caps? Microsoft's got better margins across the board. Like, look at this.
You don't have to twist my arm to agree with you that Apple is overvalued, bro.
No, but I'm just saying, like, Microsoft, to me, that and Nvidia are the two that are just Meta. Also, I have a very full position on Meta.
Steve,
I need more Microsoft in my life.
Let's call a spade, bro. You'll talk all this shit and you'll still own Apple at the end of the day. Why?
Because I'm not selling Apple. You don't sell a company that has 2 billion install units in the wild that is just going to continue to manufacture EPS and continue to go up.
But you would sell it to buy Microsoft with your stake.
No, I want to own both.
Then
it's called diversification, sir. Something you know very little about.
I don't know nothing about nothing.
I know you don't know nothing about it. So I want to ask you a question.
Yeah.
What is going on with HIMS? Because I do not follow this company.
God, I don't want to fucking talk about HIMS right now. HIMS.
You don't have to. Is it worth looking into or not?
I don't. So I don't know. It depends on what your tolerance for pain is, quite frankly. I think the fundamentals of the company are fine. They're profitable. They're growing. They got, good business prospects, whatever. I think the management is shooting themselves in the foot pretty much at every turn. They just pretty much provoked Novo Nordisk to sue them, and they pushed their luck pretty heavily. For that reason, I am out. It's pretty cheap.
Interesting. Okay.
So it's pretty cheap for, like, if I knew nothing about what was going on in the news, and I knew
Yep.
nothing about what the management has done recently, and I look at just the numbers, I'm like, oh wow, this is pretty cheap. And it's kind of de-risked in that perspective. But the management team is not making great moves. They just got sued by Novo for their weight loss business. The FDA basically ruled against them. So if you want to buy a stock that's cheap with a lawsuit overhang, then
No,
that's Hims for you.
I don't want anything with a lawsuit overhang.
I mean, it worked out well for people who are buying VG.
And I'm one of those people.
Yeah, I mean, for Hims, it's going to be, who knows when it's resolved. It could be years until it's resolved.
Yeah, I'm just eagerly anticipating 2 more earnings calls, Nvidia and Zeta. I know you're not on the Zeta train, but I am.
Let me share something for you. Because your favorite, the philosophical investor,
Oh
has
boy.
struck again.
He is my favorite. No way.
He says that's how winners do things. Waiting for late Tevis. Steve, with the chocolate milk in one hand and the normal milk in the other hand.
Amazing.
This is a masterpiece.
Dude, it is a masterpiece. I am going to have to get some of these freaking painted.
Yeah,
His freaking thumbnails, or wherever we're going to say that these are, that he makes, is amazing.
yeah, they're like Renaissance paintings, bro. They're like
Yeah.
Baroque or whatever. They're beautiful.
It's amazing. I love it.
Hey, keep spending those tokens. It's all going to be good news for Nebius at the end of the day.
This is true. So you did not get on the Zeta train, did you?
No, I did not get on the Zeta train.
Was there a reason why, by any chance?
Is there a reason why I didn't get on the Zeta train?
Yeah.
I don't know, man. I don't. It just, I don't know. It wasn't like that interesting to me, Like, the use case is interesting. I think they'll be fine. The growth rate is not that exciting, like 30%, year on year or whatever. And the space is kind of confusing. I don't know that I like understand it fully. I wouldn't be opposed to the Zeta train, but I just need to do a little bit more homework on it. Also, Jack, thank you so much for upgrading your membership. That's very generous. Really appreciate that. Thank you so much. Yeah, I don't know, man. I don't know. Like, I feel like I could buy it just for the memes, for the content, and so I can start talking about it, and that will help me do my research because it's going to force me to start talking about it. But I don't know if I want to sign myself up for all that work right now.
It's a $4.2 billion company, Thomas.
Yeah. You know what else is a $4.2 billion company?
That's about to have its 16th consecutive quarter of 20% year-over-year growth in revenue. And its 19th consecutive quarter of expanded EBITDA margin. And it's about to flip everything with operating income and net income.
Steve, these are all good points. Do you know what else is a $4 billion company that's growing 49% year over year?
I do not.
Hims.
What?
Hims.
Hims?
Yeah.
Hims is in a little bit of trouble there, sir, though.
Hims put up $600 million in revenue for Q3, and they're $4 billion.
Yeah, the lawsuit overhang is killing them right now.
They're trading at like a 2 price to sales.
The numbers are interesting.
There you go. So my point is like I can make all the numbers look interesting, but if you don't buy into the thesis, then it's a moot point.
So I buy into the thesis with Zeta because of how much their customers get out of utilizing their platform. Now,
right.
Do I think that Zeta is going to be $100 billion company? No, probably not. But can Zeta get to 20 billion, to 25 billion? Yes.
Probably.
That would be a 5 to 6x. That's interesting to me. And I don't think it's going to take 5 years to do that either. I think that could happen in the next 2 years. If over the next 2 years, if they can continue on this track and become respectfully profitable, this thing could. I'm not talking about market caps going crazy, but I've seen way worse companies hit 10 or 15 billion market cap or 40 billion. Zeta's got a lot of potential.
I need to take another look. I don't know, man. I need to take another look. I don't know why I got so like crazy hyped with the retail crowd. Quite frankly, like it's one of those like.
Think about this with Hims. Hims has a lot of trouble only because that arena. You can have so many lawsuits. You can have so many things go against you with regulations. I just don't like that industry. And a lot of people have done very well with that industry. I just don't like it. There's too many unknowns, and I'm not a biochemist. I don't know anything about that stuff. It's much easier for me to understand a software company and the numbers behind the software than understanding all the ancillaries that go into the drug making.
Yeah. In other news, there's how many of you here? 235 plus. Hold on. How many of you
We got 1,011 total.
All right. There's 1,000.
I have to go into X also.
There's 1,011 of you, and I need all of your help. What should I have for dinner tonight? That is my question to you.
Okay.
Greek souvlaki, pizza, burritos.
I got an idea.
You guys pick, and I will order it for me.
Blueberry pancakes.
No, Steve, get out of here with that, okay? I'm not having Subway, so don't give me the Subway answer again. Sorry, that was a one-time deal. There's 1,000 of you here, and I think
Uzi called it, man. Chicken parm for the win.
Chicken parm, Uzi. Nice to meet you in New York, by the way, Uzi.
Chicken parm for the win. I love it.
All right. Sushi, tacos. All right. I feel like I have to get a poll going. Greek is going to be one of the options in the poll. Pizza is going to be one of the options in the poll. Sushi, I think, should be one of the options in the poll. I don't know what the fourth one should be.
I think you should let our friend decide what you get for dinner.
I'm letting 1,100 of our friends decide what I get for dinner.
All right, Joe. I don't even know what the hell that is.
We're starting a poll. Greek, pizza. What do we say? Greek pizza.
You do Chinese?
No, we're not doing Chinese.
Not doing Chinese. Okay.
Ribeye steak. Ooh.
I mean, that sounds good right now.
Souvlaki.
Red meat.
Filet mignon with 2 eggs. Bro, who are you guys? Sausage and milk. Ew. Oh, sushi. Sushi was the third option. Thank you. A little bit marvelous. And what was the fourth option?
Oh, Michelle.
Yes. Oh, Mexican
Boom.
food. Let's go Mexican food. So burritos.
Michelle throwing a left hook.
All right. Poll is starting. Tevis dinner options vote, please. All right. My fate has been decided. It's one of these 4 things. Okay.
You get an ice cream for dessert?
I don't know, man. The people decide my life.
I mean, I think you should get ice cream for dessert.
The people decide. What
Ice cream, whipped cream, sprinkles, the works.
Bro, are you 12? Like,
yes.
Ice
Listen,
cream and milk?
why can't I have fun?
All right, we currently have burritos, tacos in first place. There's only 44 votes, so this is an ever-changing poll, Steve.
Oh,
This is let me share my screen and zoom in on this poll so that the people can see. This is what they came to see. None of this spreadsheets shit. Like, share my screen, please. All right, here we go, guys. Come on. What are we getting? This is why I'm never invited to actual talk with interview, CEOs or anything like
yeah,
that.
seriously.
Because of this.
Seriously. It will turn into this or gambling. One of the two.
Yeah, or both. Honestly, is there
Or
any
both.
Right?
Or both.
Yeah.
In all seriousness, though, I think you and I should listen to the Zeta call together when they report. And I think we should go through it and cover it live.
It's next week, right?
I think this is going to be a really good company.
It's next week, right?
Zeta is the following week. It's on the 24th, post-market.
Okay. We could do that.
Ooh,
Poly market. Somebody wants to start a poly market for Tevis dinner. You guys want to bet for what I get? That's crazy.
That is crazy. For sure, don't do that.
That's crazy talk. You guys would actually put in a bet?
It looks like you're going Mexican, sir.
I don't know, man. There's only 70 votes, so we'll see. George says Greek. There's no other choice. All right.
You go Mexican. That's all there is to it.
I will report back, guys. Thank you for participating in the poll.
In Tevis's madness. So
in Tevis madness, yes.
PayPal, Chris is in it. Chris and I did a deep dive last night. I don't want to bore everybody with it, but are you thinking about being a vulture like us? Or are you don't care about PayPal?
Steve, do you understand that money is a finite resource that I do not have?
I understand that you have it tied up in cash secure puts and all these other things. Technically,
Yes.
You do have it. You're just using it for other things.
No, dude, I got put like 3,500 shares of SoFi, so I don't have a lot left.
I love the fact that you just said that you got put for that. Good role model. I mean,
Yeah.
that's what happens. What share price did you have to buy it at?
Like 25.50,
And it's at what?
21.50-ish.
Okay. You couldn't roll it?
No, there was no time value left in it. It didn't even make sense. I would just do like a roll a month out and like it'd be like at par basically. No net. I wouldn't get paid anything.
You wouldn't be able to roll it down. You'd have to roll it flat.
Now, here's my issue because I don't have sufficient capital to cover all of my. If I get hit on everything for March, and my fear is that I'm going to get like 1 month early assigned because I got like 2 weeks early assigned for SoFi. I have March 20th, Nebius, and there's earnings. So either I can close out, and they're in profit, but either I can close out tomorrow and be good,
or roll the dice and be really good,
or roll the dice and be possible.
See, I know where you're going with this.
Yeah. So
how about you close it out tomorrow and make sure you're covered and not roll the dice?
So let me walk you through my degenerate thought process. Okay.
I don't need you to. I knew where you were going with it. I already know what you're thinking.
Hold on. My cost base. Oh yes. Paper Gains is in the chat. Please tell me what the tea leaves show for Nebius. Look, I think my cost basis, my break even for those puts is $70. Okay, for Nebius. So if I get hit, what's going to end up happening is I'm probably going to cut some of my Meta or Amazon because it's my piggy bank positions, and I'm just going to let the Nebius get hit. I don't know how crazy somebody has to be on the other side of that trade to early assign me Nebius, but if they shit the bet on earnings, then I'm toast. So that's I'm flying pretty close here, guys.
Toast, like in you're going to need to go get a hard capital loan, or
toast like I'm going to be living under a bridge. Just
ooh.
Nah,
how do you guys know I didn't send him a link already?
Am I going to be on a podcast with Steve and Asian Steve?
I mean, I think this is happening. I already sent him a link on X before he even said that. We may break the internet right now. Could happen. The multiverse is about to happen. Yeah, I don't know, Tevis. Maybe you sell half of it tomorrow. At least protect yourself somewhat. But I think there's somebody else that can give you a better idea of what to do. It just happened.
Hey! What's up? We made it.
There you go.
Even I'm yelling. Maybe my neighbors. Anyways, so is it Taco Bell tonight? Is that the official verdict? You guys like this swag?
I think I got vetoed, and I think we're doing Greek.
So oh, really? I mean,
that's life, bro.
Greek is.
You can't get what you want, you know.
Yeah.
So, Jason.
Tevis.
Show me the tea leaves, brother. Show me the tea leaves.
What are we doing? We doing SoFi first?
Oh, yes. My very own Technical Tuesday. Let's do it.
It's not Technical Tuesday. This is options, which is very different. Well, it's not. It's similar, but it requires a lot more. But have you ever heard of something called a stock repair? So I know that you can sell options, which means that you can do these things. And now you have multi-hundreds of shares. We know you remember SoFi, what was it, 24 or something like that? 24 was support, just off the top of my head. I'm going to pull up an options chain, but a stock repair is selling 2 covered calls and buying 1 lower call. So if it bounces, but you do it for credit, you do it for nothing. You collect money to do it. So you don't really want to sell more puts if the market's going down. It's to be negative. We call it negative gamma. It just makes it worse. We don't know if the stock market's going down, or we don't know how long it's going to go sideways. Not really, not in investing world. But we do know it could get a bounce, and it may not go all the way back up. And we just want to get you back to some kind of green, right? So the strategy from an options perspective is called a stock repair. And so what it is you buy a slightly out of the money call it like 60 days out to expiration, and you sell 2 higher, further out of the money calls against that, because you can sell 1 against the call that you bought, and then you could sell another against your 100 shares, and you put that single trade on for credit. So you collect money, and if it bounces, you double your income during the bounce. Does that make sense?
Kind of.
The trick is you got to do it for credit. So let's say I bought, a 24 call. I don't know. How far do we want to go out? April?
All right. Do you want me to actually walk you through?
I'm doing it right now. I can look at it. And then,
Steve, can you throw up his screen?
oh, you want me to share?
If you were sharing it, I could.
Oh
Yeah,
my
I'd love
goodness. We're
I mean,
going.
you
This
don't-
is
you
this is not. This is not.
I'm a
It's not
visual learner,
technical
baby.
Tuesday.
The real question that I have is, what do you got in the fridge behind you?
Dude, actually, the fridge is mostly barren right now. If we want, we could bust out one of these, but it's mostly liquid death.
Oh, okay.
Mostly liquid death.
All right.
But I'll crack one if you can pop a bottle of yogurt or something like that.
I actually don't think I have any more.
You don't?
No, the market was closed on Sunday. I didn't get to go.
Oh, dude, special
And
deliveries.
Now, I was drinking chocolate milk out of a pint glass, if that makes you feel better.
All right. Okay. Let me see. We're like late night working. If I were to share,
I have to go in exactly 37 minutes, Esteban,
Okay.
because that's when my food's here, and you guys are not.
I don't
watching-
even need 37 minutes. It's just the
Yeah.
it's just the what's the word? The like logic here. So like this is an options chain, right? So this is SoFi. And if you think you want to bounce, you want to do something that's more than 45 days. So this is 45 days to expiration. That's March 22nd. So like you want to do something that's more than 45 days out of the like to expiration to actually have some like juice that's worth the squeeze. So this was just like, I'm just grabbing something random. And if I'm seeing, what is this? A 25 call for March. These are going for $92 a piece. It's a 29 delta. So if I were to buy one of these, and then if I sold something that was like, I don't know, $28, just random, something like that, I could sell.
So you bought
two
a
of
25
those.
and sold a 28. Did I understand that correctly?
For you, I didn't, but like if you were to do that, you would
Right,
basically go +1, right?
Yeah.
And then -2 here.
Got
And
it,
so
got it.
my +1 would be 92. And then I would collect 47 times 2, which is more than $92. So this is a free trade. This is called a stock repair. And anything inside of this box right here, and well, not even that box, but anything up to 28 would actually double your profit without spending any money. And as this gets in there, what you do is you take this, in essence, what this is, 25 to 28, that's actually a debit spread. So you'd be long an extra debit spread that you basically got for free. And what you would do is you would close that debit spread as it starts to bounce up.
What's the catch? It's just a limited upside?
No, it's not really. I mean, yeah, I guess the catch is if it's all-time highs, but at that point, you could still just close the trade. You're still gonna. It's not. There's no catch there. The catch is that it doesn't protect downside.
Oh,
That's
I see.
the catch.
Yeah, okay. That's interesting. I gotta look at that for puts.
Just
'cause my-
Google
yeah.
something called stock repair, or like you could AI it, right? What is a stock repair option strategy? It'll tell you all about it.
Yeah, dude, Gemini's been helping me quite a bit with this stuff. I'm like, hey, this is my position. This is what I'm looking at. And Gemini is like, you're a fucking DJ. And Gemini's like, this is a big
Yeah,
issue.
yeah.
And I'm like, no, it's fine.
Yeah, Grok is probably the best for trading and financial stuff, I think. But Gemini's good, like all around.
It freaks
I mean-
out because it doesn't have like live options data, and it's just like, oh my god, you're in a huge crunch. And I'm like, no, dude, I can roll it because like they're high beta names, so they're so like the time value is so valuable on them.
Yeah, so that you have to know, and we're gonna know. I think we're gonna know after this next week. So we got NFP tomorrow, fucking tomorrow morning. Sorry, we can curse here, right, Steve? This is
this is not made for kids. I can
this
tell you
is
that
late
much.
night. This is late night TV.
Other than the chocolate milk, there's nothing here that's kids related.
Listen,
Yeah.
chocolate milk is for everybody. All right.
Hey, otherwise, if we start going down after CPI and after NFP, we might just be in a little bit of drawdown, at which point I would just say strat or call your stock, right? You sell some calls, buy some puts with the premium. Forget about collecting premium, because collecting decay is not going to save you if we actually go down any further. But you do that also for free. So the thing about hedges and any kind of, fix my trade kind of strategy with options, the key is always to not pay for any of that. Whether it's a hedge, I want to hedge for free, or if I want to make a little extra money on a bounce, there's always a way to do it for free.
Yeah, I think the thing that's really been hurting me is like getting early assigned on stuff, because I'm writing like at the money or in the money, but I'm doing it like a month or 2 months out, and then people just do the math on like what is the time value of that money, and just they early
Intrinsic
assign.
value. Yeah, intrinsic extras. So you have to do the same thing when you're opening it, right? Like you made a bet. What did you say? You sold $25 puts and you collected how much?
No. I sold $30 puts and my break even is $25.
Oh, so you sold $30 puts. You collected $5 per put. I mean, you made a bet that SoFi is going to hold 25, which was, I think, general support. That's all.
Yeah, exactly.
Yeah. If you see stuff like that going against you, you could do debit spreads, like put debit spreads, like buy a lower call, pull out a bunch of margin, keep the trade on, buy a lower put, pull out a bunch of margin. That'll cut your margin requirement by like 80%.
Yeah, I don't really hedge, but I should start hedging more. I think that's just prudent for me to do. I don't know. I'm still learning, right? So there's a whole bunch. I think like the main thing that I rest on is the fact that I'm only writing on stuff that I want to be owning long term anyways.
Yeah.
And
so you don't want to be selling cover calls like crazy anyways, because what if you get assigned? You don't want to sell it, right?
No, it's fine. Like I can I can do covered calls on the SoFi shares that I got put like basically at break even, because it's in the wheeling portfolio. I still have my main SoFi position for long term that I'm not writing on.
Oh, then just start selling $25 calls.
Exactly.
Yeah, 25, 26, something like that. And so then you want to do 40 days, like it's like 42 days to expiration is where premiums start really burning. So if you target that, I said target 45 days to expiration, that's where you get after 45 days, you start getting more rapid decay, and it actually makes sense to do those versus selling like really far dated, if we're going to at least chop sideways, but there's always it's still not going to protect you from downside. The only way that's going to protect you from downside is if with the premiums that you collect, you buy some protection for little to nothing.
Right.
But that also means that if you're worried about it, which, we're pretty low right now. So we're gonna, even if we dump a little bit more, it's usually when you start to pucker a little bit, that's probably time to buy anyway. So you might be close to that. So you might just want to do it again anyways.
Yeah, I'm not worried. Like I'm just running the
Robert says self-uncovered strangles. That's a good one. Yeah.
Yeah. I'm just running the use case for like, hey, what's the worst case scenario? And like, how would I cover the liquidity crunch? And I think I'll be fine. I just,
as long as you're not using margin, you're fine.
Yeah.
Average cost is like 80.
What do you think we're going to go one leg lower? Like what do you see?
Nobody really knows. I think like you guys, like we see the capex, you see, what is it? Google's 100-year bond today. Like what is that?
Yeah. What the hell that doesn't even make sense.
I think, did you see the stock too? The second that kind of came out, like they didn't really like the market. I say the market wasn't really a big fan. It's just a little weird. I think that even if we rally again tomorrow, we still have to watch out for CPI, right? And so I think I want to wait. I'm not in a rush to buy anything, but I always forget who is the general that said, maybe Steve knows, don't shoot till you see the whites of their eyes. Like you got to wait.
I know exactly who you're talking about.
You know exactly what I'm talking about.
Yeah.
So you wait.
Or what?
Yeah, something like that. And you shoot when you see the whites of their eyes, meaning like you're getting rushed by the enemy side, and it's like hold the line, and then go at the very last second. Like it's the pucker factor. If you got a pucker factor 9, then you're probably close. If your friends are calling you and be like, what's happening? It's probably not time. But if your friends are like, I already sold, dude, I couldn't handle it, then it's probably time.
I don't think CPI is going to be bad this quarter. I think then the next or this month, I think in the next 2 months it can get bad if crude stays above 65 and if gold and silver stay where they are.
I
'Cause I
kind
was
of like oil stocks and stuff, though. I don't know.
oil stocks have been great. I mean, nobody wanted to listen to me on SLB or Chevron, and they're
Oh,
doing
I'm
great.
long SLB. I've been long SLB
Dude,
forever.
I've been talking about SLB since I was 32. And I'm like,
Same,
nobody
yeah.
is
The
looking at their
slob.
cash
We
flow
call it
statement.
the
They're buying back a
slob.
shit ton of stock, and it was just so undervalued.
Yeah. I mean, they were the bigger international play. I think I don't know
Yeah.
how much Halliburton actually has in terms of Venezuela, whatever, but I mean,
The two of them are going to do very good, especially with 610 billion being spent in capex. We need more upstream production.
yeah.
They're the two largest oil field service companies.
No, I like them. I mean, what are we doing with Oxy though? It's not gas. Oxy's not
Oxy,
gas.
so here's the thing.
Is
I
that a
don't borrow
generational
Oxy.
low? Dude, people like VG, this, that, and the other. Like,
No,
wait a second.
Chevron's been the play.
It was
May not be
Chevron
the
and
play
Exxon.
now, but Chevron at 130, 140 was the play, not Oxy.
No, not Oxy. But Oxy's different. It's a lot in that gas. And
It's a huge Permian play. I'm surprised it hasn't been acquired yet. So I don't know.
There was who was it? Oh, Devon is gonna acquire somebody.
Devon's merging with some other company.
Yeah. I mean, those stocks are actually doing well, which is kind of you see that and you feel like, well, it's a little risk off. You know, I have what's the other stock? My lipstick stock is Ulta, right? Ulta Beauty is my lipstick stock. The thing is doing well. You know, so there's always that. I don't know. It's a midterm year, dude. Things get wild. All I know is for sure, it's like in my 4-year cycle, this coming September, October, I don't really care what the headlines are. I'm going pretty heavy. But like if you're trading the calendar, it's maybe not this dip, but the next significant dip, it's usually the one.
Bro, I love the range that you guys have. You're talking about oil stocks and lipstick stocks in like the same sentence. It's fucking wild.
Well, dude, I mean, it's
all
the
you care
market.
about is tech.
Yeah.
Yeah, I mean, that's it's a compliment I'm giving you.
I mean, I've been trying to get you to diversify and broaden your horizons.
How old are you, Tevis?
I'm 31. I only got like 8 positions, bro, so
You can't really see this, but like there's actually a lot of grays. I think I have significantly more than Steve, although I think we're probably, how old are you, Steve?
43.
I don't even know how old I am. I'm 84. How old does that make me? I'm in the 40. I got a 4 handle. That's for sure.
bro.
Yeah, I mean, listen, I am
comparing gray
definitely
hairs,
going
then
But I think it's just because of that you might have different exposure. You've been like, you know, less working years left, if you will.
you see these gray hairs, Jason. This is owning
Actually,
a tech
dude,
portfolio.
Look at that.
Yeah, tech heavy
All right.
portfolio right here.
Guys, we're sending Devis some Just for Men for Valentine's Day. I got you.
I mean, the problem is it's not, you can't even say it's really tech. It's all high beta. It's all high beta stuff. It's not like you're in Nvidia, Amazon, Alphabet, Microsoft.
Amazon's stupid here, though.
I know. I'm writing an article on them this week. It's very being.
If the market does stupid stuff like Amazon sub 185, like you kind of just. So like it's weird too because it's really hard. I don't like if you actually look into it. Most stocks don't go up over 50, 70 years, right? Like I think of the Fortune 500 since inception, there's only like 50 stocks that are still around.
Can you show me what your chart would look like for what you think Nvidia is going to do?
Nvidia?
Yeah.
if you pick up, do you have a box or something like that? So like here. Here is a box, and on it is a barcode.
Yeah.
And so I kind of think it'll look like that. Like, no, I mean, so Nvidia, I don't think there's any question about Nvidia like being a beneficiary here. That's already kind of assumed. The market just wants to know what's next, right? Like, what is it? Is it the next? I honestly, dude, I kind of think it's that CPU. What's the CPU? Vera?
Very, yeah.
Yeah, but that might not be for a while. But it would be the market's always like, okay, what have you done for me lately? Right? It hasn't done anything for me lately. They're like, well, I'm just bored of you. And so where's my
gonna
alpha?
blow numbers out of the freaking water.
Yeah, and it'll do it the second that it starts to dump. Let's say you see 160 or something like that, 165s as like basic little, in TA, there's like I say this a lot. I don't know if it's a saying, but something I say a lot. It's like if it can't go higher, it has to go lower to find more buyers, right? So whoever's involved in the market right now is not strong enough or not adding to their positions enough to push the stock higher just yet. But if it came down a little bit, it might entice people to get involved again, or maybe a little bit, which is sometimes what the stocks need, right? A big dip is probably like 135s, but I don't know if I can't say that that's happening yet because we're holding the range. It's just not going anywhere. Which, Steve, how long did Amazon go sideways on the last?
It's still fucking sideways, bro. What are you saying?
No. Steve knows because I
get it.
Like 5 years, it went nowhere.
I mean, in the past, I don't even need to look at a chart. In the past 5 years, Amazon's up like 38% or something like that.
Yeah, but for a very long time, I think like half a decade or something. Just off the top,
it's underperforming the market.
Yeah, but when it did finally make its move, I mean, it just ripped face, right? And also before it made the move, it went down just a little bit.
26% in 5 years because of the freaking dip and where we were 5 years ago.
Yeah, like if you want
how much underperformance this is.
If you understand like investing, right? Like it's not stocks. We're like people are so spoiled from like recent years. I'll just grab it. I'll show it a chart. But like this is very long-term chart. Dude, 593 days, that's 2 years sideways. And this is not abnormal, right? So like this is 2018 to 2020. This is Amazon investment phase defined by Bezos. We're going to go in an investment phase. We're going to build out our, prime shipping, things like that. And then within a span of a very short period of time, you go up 86% within 3 months, like after going sideways for multiple years. And then after that, it goes sideways again for another 2 years. This is pretty normal. So, and this is like one of the greatest companies ever, right? And then you get this big flush and then jump out, whatever. But I mean, it's fairly, from a long-term perspective, it's, oh God, that candle looks kind of ugly, but it's fairly typical.
Jason,
actually, hold on.
Don't scare
That's
me,
not
okay?
that bad. Hold on. Because I mean, I like Amazon. I had 185 is the number that I said earlier because you can't see this. Let me see if I can change this. Because this 188 level, that's 2021 highs. So it's not a lot more to come down. These are my last entries. It's not a lot more to come down, but like if it were to come down a little bit more, that's not a bad spot longer term if you don't think the company's going bankrupt. Which I mean, it's not going bankrupt, but anything below there, long-term perspective would probably be fine. Just my 2 cents. But in the meantime, traders going to trade. They might trade short, which is like what, $20? No big deal. But this guy has to, the 225 is kind of like that center line. So like even Amazon, I, maybe sell some 220 calls, if I can collect more than $10, that gets me 230 upside. And then I can have some downside protection down to 190s. It's not like we're almost there, man. Like I'm not worried about, we're almost there.
Can you do the same thing for Nvidia real quick?
Nah.
Technical Tuesdays, baby.
Technical Tuesdays.
Oh, dude, don't tell him that we're cheating on him. But I mean, this is how long? This is like.
So explain to everybody what you're doing.
It's not even that long. I'm just looking at very broad perspective. If this was just a super basic chart, right? Like this is a weekly chart, this is a daily chart. I'm just looking at like the waves. I call like the impulses. Like stocks don't go in straight lines. They have like an impulsive wave. So like an impulse meaning like this is a push to the upside, and then they go side. So they run, stocks run and then they rest, right? Long term, they run and then they rest. Sometimes they run down, right? Like this is down. There's a small rest here and then it's a run up. Right now, this is a big resting period. All this tells me right now is that a big move is going to come in the near future. Like let's say within the next 3 to 6 months, a pretty substantial move is going to come. Like this, if I were to just say, okay, well, how long was the last? These guys don't remember, but this is $45. I vividly remember Nvidia, $45 for a very, very long time, 179 days. And then massive sideways burn, makes a quick move. This is why traders trade. Traders just wait for this one moment. They jump in like right over here, and then they exit stage left, and then wait for the next. They're just like surfers surfing a wave, right? And then you get like another 2 months of continuation, 2 months of sideways action. Technically, you know what, dude? How long was this? 400 days. So even a year of basing is not uncommon for Nvidia. But look, there's nothing about this right here that's telling me that that's going down yet. Even if this was the broader, like basic trend, it's holding this. All I did was I'm just taking the lows and connecting them one after the other. If I can connect 2 or 3 lows and or 2 or 3 highs, like here's 1, 2, like that. So this, if I'm zooming in, this is TradingView, by the way. TradingView is free. You don't use Robinhood or Yahoo charts to chart, but like the 1, 2, 3, 4. This is just consolidation here. So like a big move might not even happen on earnings, but like eventually when it gets to something like that, it could go either way. But it's gearing up. It's in a wait period. Ceasefire from the Bulls and the Bears. The Bears don't want to take shots at it. The Bulls aren't really strong enough to move it. But it's consolidating. So when it gets to like the pinnacle or starts to break one of these sides, really, that's when you'll start to know, hey, look, a move is going to happen. But you got to wait for like really this whole range to be cleared.
Jason,
you'll know.
Can you take a look for us at Nebius, because they report on Thursday before the bill?
Yes, right.
Yeah.
Ooh, Travis wants to know if he's getting bailed out of his SoFi position.
I need to know if it's Lambo or food stamps this week.
Well, I can't tell you that because fundamentals are greater than technicals, right? Fundamentals supersede technicals 100% of the time. So like a fundamental story is what really dictates the charts at the end of the day. That's what's true, right? So like any good technician, like worth their weight in my mind, has to have a pretty decent, like, if I don't know a stock, I don't want to do charts, but like I'll do it. This is all about spend. It's also about, so the thing about Nebius is it's not really like, it doesn't have the US exposure, right? It's like the expansion. It's not a US company per se. I think it's listed US, but it's about like global expansion, at least European expansion, which I think they might be doing better right now. But, you know, I have my next level to text our friend at 58. That's all I can tell you is that my alert is set to text him it. That's at 58.75. But in truth, I don't know if I can get this. What I would really like in real life, the way this works, is I go into the stock. This one is a newer stock, so I don't know how many earnings it's going to have. And you got to find the average move.
Yeah, I think
so,
implied move is like plus minus 13% or something like this.
Yeah, so expected move, this chart's in the way. Something happened on the screen, but the expected move here actually says 10. So it says expected move 10.5%, and the prior moves are 8.5. So first of all, options are slightly overpriced here. Oops. First of all, options are slightly overpriced. Did I just close that screen? Oh well. It said 8% move on average. So all I can tell you is that an 8% move, dude, it's not gonna, you're good. Even if it were to move 12%, that's basically 73. And the other thing is that if it were to move 13% to the upside, that's 108. In either case, it doesn't really change the chart for Nebius. So this one's still kind of consolidating. Even if it got to that 108, I'd say at that point, if it doesn't, so for earnings, there's actually a pretty easy hack. I say easy. Simple, it's probably a better word, hack on earnings. And that is like the vast majority of the time after earnings, let's say you have like a power earnings gap, you want to give the stock like one solid shot to break the highs, not like 3 or 4. If it doesn't, like, so on earnings, it'll make a high and or low, doesn't matter, high or low, doesn't matter. But after earnings, if it doesn't continue in that direction, you're not going to, probably not for like a couple months. And at best case scenario, most of the time, what happens is that stocks will go into a holding pattern for like 45 days. Like back test that, you're going to have like a 70, 80% probability of that exactly happening. There's like certain stocks, you guys on this one, Corning? Dude, Steve.
Believe it or not, GLW, I own it.
Oh, let's go. Let's go.
Of course.
What are you doing? Look at this. Look
Tevis,
at this.
what are you doing? You don't own
Look at
Corning?
beauty.
I don't
Look at
know.
this
Gorilla
beautiful chart.
You don't know
I
about
mean-
the Gorilla Glass, Tevis?
It's
Bro,
not
I
the
need-
Gorilla Glass.
I need those lines to say text Tevis, and then I'll be in these names with you. All right. This is you gotta bring up everybody with you, man.
Okay. Well, this might be a little hot right now, but if this came in, so here's earnings. Oh, this stupid dictation thing. So here's earnings here, just as an example. And so you get like one, and we could do this, you know, I could do this on Micron. You get one shot. This actually barely broke it. And that second, you get a little bit of pullback, you're good. Micron is a good example in history. Here's earnings here. Like this is Micron way back when. It's a pattern that repeats itself pretty regularly. You have an earnings move here, one shot. It doesn't happen. It's not usually going. Here's another earnings right here. Big move to the upside. You get one shot and like it'll pull back. You get a shot. It didn't happen. And so what you usually see is you see like 45 days. That's 75 days of sideways chop rest period before you get closer to the next earnings. And then they get what we call like a pre-earnings move. And then here's another one. Here's the actual earnings. If it doesn't go right away, that's fine. You're probably going to pull it all back. In this case, it actually did pull it all back and then kind of base around. We could probably do this with Meta too. But the second it gets there, over that earnings point, dude, you're off into the races, and this thing is just like gonzo. But Meta, super similar. This is earnings here. You get one shot. And I think Meta, it took its shot the very next day here. Yeah, it's just pulling back. And at that point, you've now given back the entire earnings move. So it's not that Meta's in a downtrend here, but it's a super typical pattern where like you get one solid shot at breaking those highs and or the lows. Because if I were to flip this chart upside down, I could have said, hey, if it was going to go lower, I just turned it upside down. I could have said like, hey, if it was going to go lower, it gets one shot. And if it doesn't do that, it's not happening. But it goes into a rest period. And it's that rest period usually 45 days. So in the case of Nebius, you have your range now, call it 108 to 73, which is exactly where it was either 5 days ago or 10 days ago. Pick your poison. And then, and if it doesn't break one of those highs, expect 45 days roughly of consolidation with of course a caveat of some kind of news. But that is the point where premium selling becomes like your friend. And I would say that you can bank on that in terms of like, if it doesn't go, then it's like sell that straddle or sell that strangle, like sell the upside call and the downside put, because you might be in a sideways movement for exactly the sweet spot of options, which is like 45 days to expiration.
That's actually very, very helpful. So 108 is the recent high to break, and then 78 on the downside, right? From the earnings.
Yeah. Yeah. And if you do break 78, then don't buy it again until 58. And I'll be texting Amit. And let it go. You don't want to step in front of them. Just let it go. Like if hoodie loses 70, like I love my hoodie, but if it loses 70, I'm not going to buy it again until I see like a 5 or a 4 handle on it.
That's actually a good segue, because I was talking to Steve at the start of this pod around what price he would buy Hood at. And we were doing like a little valuation chart. But from a technical, I mean, they're down, what, 8% now in after hours off the back of this earnings?
Yeah, but they're not, but they're still, it's still higher than it was on Thursday. So technically, okay. Technically, right here, right now. So same rules apply. Whatever the low is on hoodie tonight, since they just reported, we can do this. You get it. It's going to have one more shot to make a new low. If it does make a new low, cool, fine. I'm not going to step in the way. I'm not going to fight the trend. I'm not going to be buying calls. I'm just let it breathe. But at the same time, the highs of 85, it should actually at least get up there. So 85 is a prior all-time high from way back when. But I think, interestingly enough, and you cannot see it on my screen right here, this little box, it's between 77 and 71. So anybody that watches Technical Tuesday will know that like I was kind of like projecting the low 70s for hoodie. What we're looking for in general for the stocks, yeah, we had a nice bounce of like 48 hours of glory, which I think was kind of like foretold after Tuesday's washout. But next thing we want to see if we're going to start to base out is a higher low. And that's exactly what this is right now. So I'm just cautiously optimistic, but I'm not going to do anything. What I'm going to be looking for is like, can this bottom in this box down to like 73s or something like that and lock in a higher low? And then in general, what I would look for is like for Robinhood to actually trade in this box. This box goes up to 91, which is that prior breakout. So like between 70 and 90, which sounds like a large range, but zoom out, it's really not for Robinhood. That is where I would like to see her sit for just a little while and let new investors come in. And then after, so stocks make a run, right? A run and then a rest and then a run. I would like to see a resting phase and then another run. Do I get my wish? I don't know, right? Like it's a wishful thinking, but I also know it's possible that maybe the run ends up being here. But when it's getting towards the end of that resting phase, that's when I start to like, after it's been resting for like the 45-day kind of thing, that's when it gets more interesting to watch because it starts to give you a bit of a tell. Same thing here. It's like this was a 118-day resting phase, but you know, you zoom out and you see it's kind of heavy. We kind of saw it coming. You know, you don't want to believe it just because it's the chart says something, but you know, it's the greatest company in the world, whatever. Or you don't. I don't know. I mean, I liked it, but like, I still like it. You'll get a little breakdown like this. And the biggest concern for at the index level right now is that we get what we call like a counter trend rally that looks good on the surface, but it just ends up being exit liquidity for other people. And then it continues down. So that's always kind of in the back of a trader's head. We don't know at this point. I don't have enough data in the chart to say that we bottomed. So, you know, what I can say is like, there are going to be points where we'll have very violent, rip your face off, counter trend bounces. And depending on your time horizon, that's trading terminology. It's not investing logic or anything. Investors don't care. You buy and hold, it's all good, right? I would buy here if I'm an investor with any sense of a 3 to 5 year time horizon. I'm a buyer. If I wasn't already full, or if I didn't already buy exactly this dip, because truth be told, I did. but I shot my shot. I took my shot, and if I'm going to add to this, I don't want to add either. Just as a meaningless add. Like I want it to mean something if I add to a position. So I'd want it to make a substantial difference in my cost basis and mean something. And 2, I'd want to make it a meaningful add at a lower level if I have the opportunity. Because in the meantime, I could just be, you know, blowing my load all over here, and it doesn't go anywhere for a while. So there's no real reason to do that.
Yeah, that's super. Honestly, man, this stuff is like you're reading the tea leaves. I tune on Technical Tuesdays, and it's really interesting because it's just it's astrology for men, right?
Yeah, it's like the weatherman though, because like the weathermen are pretty good lately. They'll know if a storm's brewing or not. You might not be exact on how many inches you're gonna get or feet of snow, but it helps. So if you're a trader, it makes you like, you know, as an investor, trading versus investing, as an investor, it's all about the power of compounding. Time compounds, time heals everything. Time heals everything. The more time you have, the better, like you should not worry. But if you can, as an investor, if you learned how to trade, you could supercharge that compounding effect in terms of not adding at the wrong times, maybe selling calls at the right times and buying a little bit more aggressively at the better times. As an investor, if you learn just a little bit of that, oh man, I mean, you're going to outperform 90% of hedge funds for sure. Or as a trader, which a lot of traders, believe it or not, most people that are heavy into trading are like clueless when it comes to investing, like really like clueless. But if a trader learned how to be a good investor, it also gives them an edge at the same time because of that compounding effect over time.
So Jason, I've been buying Zeta into weakness.
Okay, actually, that's a perfect segue.
Taco Bell? It's Taco Bell though, right?
Yeah, I love you guys, but I love my fast food more. I will be watching.
Also, fun fact: burritos are not really Mexican cuisine.
Don't.
I just don't think you're gonna find them in Mexico.
Don't do that to me, Jason.
Love it.
Thank you. Honestly, Jason, thank you so much for hopping on, man.
That's fun, dude.
Cool. And Steve, take it away, and I'll see you guys soon. And I'll enjoy my food now. Okay, bye.
All right, bye. I would say that I'm half Japanese, so it doesn't. The Japanese people would say I don't really count as Japanese, but as a half Japanese person, I would also say that about sushi. It's not actually like Japanese food. That's
all right, Jason. No, you already ruined burrito. Don't ruin sushi. Okay, bye now.
All right.
So Jason, I think that this is absolutely fabulous, and
Zeta.
It's something I've been wanting to learn how to do for a very long while. I've been doing a lot of
Oh, yeah.
research on Zeta, and I've been buying it into the weakness.
Yeah.
What does your voodoo here say?
My voodoo. So remember those. So first of all, if you want to get a massive one up on most people learning this out of the gate, go to a site called TradingView. It is free because you're not going to get this on Yahoo charts. You're not going to get. I can give you a link. It doesn't really matter.
I'm on TradingView right now.
Okay, cool. It's free. I pay for it because I basically live in this.
Yep.
But this gives you all your advanced stuff for free. And there's little tools on the right-hand side. Maybe I can make this a little bit bigger. There's little tools on the right-hand bar, and there's drawing tools, trend line, ray, things like that. Just play around with them. But I'll usually use something called a ray right here, which is essentially this. But you just click this little magnet here, and that makes it so that it locks onto a candle. And then that's locked on. So I can move this wherever, but you just line it up to the next low below that, and you get this little trend. So this is like the current support. Right now it's breaking, but again, earnings are coming, so earnings don't really matter. You want to do this post earnings. An easy fix for charting is like you could usually do charts within like a 3-month cycle because things will run around earnings. So every 3 months, like within that range, you'll know, hey, where's the high, where's the low, and when it's going to get there. But generally speaking, you zoom out, look left, and we see like this big base, right? So there's a lot of people that it's a story. So you're just reading the story of the chart. And so right now, the story was people basically in 2024, there are a lot of believers here. It caught a lot of run, whatever. But this is the past. We're just looking at the past because the future will rhyme. It ran up. Maybe they sold. Maybe a lot of people sold, got into earnings. Maybe they bought it back. But see this level here? They bought it back. It didn't make a new high. So by the time it finally got here, it ends up breaking down and losing all of its run. So right now, context. So we have context from the chart. We're back at that same kind of point. Below that is way down here, which is probably like a different company, like since inception. But if I were to make this really explicit, and all I did was I just grabbed another line. That line was called a horizontal ray, and I just clicked it on the candle that see right there. It just automatically prints like a straight across line. So right now, 1490 is about what I would say is like that's your support. This is support, and you can kind of see that support with this. Anybody that bought in this dip right here, essentially, if you think about this for a second, because investors run the game for trading. If you bought this Zeta dip anywhere sub 15, and you see it here, are you holding, or what are you doing? You're probably still in it, right? You're probably still in it. And if it gets too far below this area, you're probably going to close it before you go red. So with that context, that's your support. If you really like it, you might buy it again because you remember, oh, I bought it around this level back when. It's back here again. It was a good buy then, and I still like the stock. So it's probably going to be a good buy again. So those two things, that's how support forms. So that's the story of the chart right now. Just under as close to 15 as you can get. Anybody that was here in this era should remember that that was a good price. But if it goes below that, they're not going to want to see the pain because, first of all, they're not that red. They probably won't want it to go red on them. They might sell. So this area support is it's not a hard line in the sand. It's more like a zone. So this area, if you see a dip in this area, that would be your support boundary, support area. Right now, it's not in an uptrend, right? it's like, the question is after earnings, are they going to add to it? So it'll probably get to the same kind of 18, 19 level. And so if it does, the next piece of the story is like, well, at that point here, are they going to add? And so that's why we watch the charts, because the charts will tell you in real time, what are they doing? What are the investors doing? And I want to pay attention to the larger investors, people that are really moving the stock, or the herds of people as they act all at once. And we'll see them all act kind of all at once. So right here is fine. If it gets down to this area, if you're a never sell kind of guy, you could add in here, but to your point, like sometimes you just let it go. The deepest deep level here is like 13s. If you're a never sell position, $13, as close to that as you can. 15 is just going to be okay. And I would expect some kind of indecision at that point. And then people will start to kind of figure this out. But in this moment, when it's doing that, sometimes you could get what we call like a liquidity grab that ends up being like a one and done, kind of test the low end of that support. And that ends up being like the real buy. Because this is the point where the pucker happens, right? Like that's where everybody's like, oh shit, what are we going to do? And right before it actually turns around, they're like, no, I'm buying this. So that's Zeta for me. I don't know the PEs. So you'd have to go, like we could like piggyback this or tag, but like at what PE would that be? And then you have to think of like, what's the market environment? What kind of environment around? Does the market want to reward growth for right now, or is it going to be temperamental? Look at this, Steve. They're doing hilarious.
I like it. I'm going to start learning TA.
Come to class, dude.
I need to. I got to figure out how to manufacture more hours out of the day. Is what I need to do.
Look, dude, we do these training things where like, if I were to, these are our next round of classes. That's loud, but it's like, these are all pre-recorded things where it's like, we teach you all that kind of stuff, but it's a lot, but you got to learn things in the right order. People will go like, try to skip to the end and they forgot the beginning and don't figure it out. But yeah, if anybody wants to, we give like a bunch of classes for free.
So are there any overlays in TradingView that you use?
No. So this is what I mean. The first thing that you want to learn, aside from the market environment and the difference between investing and trading and the different time horizons and how not to get stuck, how not to turn a trade into an investment. First of all, that's the first thing. How not to turn a trade into an investment. Everybody's been there. The first thing that you learn is something called candlesticks. And so like what I would say is if you're setting this up on the top, there's a little bar here. Let me zoom this in.
I'm listening.
There's a little icon right here. That's candlesticks. So you want that on candles. There's all different types of charts. Like you do line charts, you could do whatever, okay. There's a million other types of charts. They're all noise. They won't really help you. So you want to use candles, number one.
Okay.
And in those candles, typically you'd want to have this view up here on the top left of my screen. I have a bunch of different, these are called time frames. And so you could do 1 week, 1 day, 1 month. For right now, like as a new trader or like you're learning, I would stick to a daily candlestick chart. And that is going to give you the best general view. If you want to be an investor, you're looking at weekly or monthly charts like this. See how the view changed? And what happened is each candlestick represents a period of time. that period of time is determined by you toggling one of these. So each candle is 1 month, or each candle represents 1 week of price action. Weekly is good. Daily is going to give you better price action stuff, but and monthly is going to give you the real broader trend. So like, for example, if I'm an investor and I'm looking at SPY monthly candles, like this is funny. And TradingView, oh, by the way, I just did TradingView has a replay feature. If your charting software doesn't do replay features, you're using the wrong software. So this is a monthly candlestick chart of SPY. It looks pretty good, right? So like an investor's not going to get shaken out of this. Even on something like this, where like someone who's glued to a 10-minute chart, a 30-minute chart, a 4-hour chart is going to get shaken out. They're going to freak out. A monthly, like someone that's actually doing investing and looking at something like this is not going to be like freaked out. And as it goes month to month, you start to watch these little candles. This is what you're watching for. You know, like, hey, if something's going lower or higher, you know, am I in trouble or not? And you kind of look for these little congestion areas. And so as this goes, I'm just going to draw a line. You can see this. It never really broke this area so far. And this is 2022, right? Bear market of 2022. Oh, it's all bad. But if you're watching this in slow motion, and these are candlestick charts, what's happening right now? This moment, after you've come down, we call this retesting support. It's 410. First of all, it's 410. Like we're talking about SPY 700. You can see it. This candle, once it's starting to go over, you start to think, okay, we could be potentially changing trend here. But as this goes, I speed it up a little bit, is 5x. The candles will start to build on each other. You're like, okay, this is the long-term trend that I'm building. At this point now, I have a pretty solid, like, oh, we're in the clear. Forget about the news flow. If you're an investor, cool, you know the news flow. And just like that, boom, we're back to the highs. Do you expect people that were stuck here to buy back in? Probably not. So you get a little chop, but we never, do we break? I don't know. Barely. Now they're getting their bearings. This is it. So these are candlesticks, and you read them just like this, one after the other. This is a monthly chart just to show you how they progress. But as you run it down into a weekly, it will go to a weekly, and I'm still playing it forward. Things get a lot clearer, right? You could see in that moment, week to week, exactly when the buyers step in, exactly when they like leave and things like that. And this, are they really freaking out? No, not even close. So these are candlesticks, and you don't need to be an expert by any means in Japanese candlesticks. No, but I'll just save you 5 years of trying to figure out how candlesticks work. And that is that there are only 3 types of candlesticks. One is going sideways, one is going in a direction, and the other is a reversal, right? We're like, it's all about how does the next candlestick evolve. So as we were watching this, you were watching all those candlesticks evolving higher. What's the next one? What's the following candle compared to the preceding candle? Is it higher or lower? That's it. One after the other after the other. And all of a sudden you have a new trend defined. And that's
so let me ask you this. If I wanted to learn TA and start day trading off of it, utilizing SPY probably the easiest way to learn instead of getting aggressive with individual stocks?
I might challenge that SPY is harder.
Really?
Because what depends on how you're going to trade that. Are you going to trade equities or you can trade options? What are you talking about?
No, just straight
Futures.
SPY equity. No,
we're
options.
doing like ES bigs or smalls. Where you go MES, NQ. We might as well just go right in the deep end, right? Futures.
No, I'm just saying like during the day.
Okay, so during the day, it's the same concept. So first of all,
before you start, I've heard so many times that everybody makes their money either right before or right at the bell. And then by 9:40, 9:50, they're done.
Yes. So that's accurate. They're trading. So you want to, so first of all, unlike investing, you can't just buy and hold. There are very specific times you want to schedule. You want to schedule your trading, right? And so this is the clock that you live in if you're going to be trading. The green, that's the good times. So it's a 2-hour session. So you need to be up before the bell rings, 30 minutes, give or take. First checklist, check the economic calendar. Am I going to get sidelined by some crazy economic news? And the first session, and then I need to know those candles, right? So that candlestick stuff, that's paramount in all situations. So reading those candlesticks is your foundation. You have to be able to do that, and how one candle evolves into the other, and how that works. You need to get like pretty deep into that. But generally speaking, as simple as marking the high and the low of the prior day, because remember when I said the candles, it's all about how the next candle shows up and is forming compared to the candle before it. So if I'm day trading, the candle before it, meaning the candle before today, is yesterday. So all I need is yesterday's high and I need yesterday's low. But I have to have that on my chart at all times, right? It's ideal to have prior week high, prior week low, but I have to have those like a straight line across, and I can do that in TradingView. It's free. And then it's have you ever heard me say, or some of the crew might have heard me say, like in trading, after hours is nothing, has not like, because the earnings goes off and people like get all excited. It's all good, but like the after hours,
It's such low volume though.
Exactly. So my saying is, there's nothing for you but lies and deceit, right? There's nothing for you but except lies and deceit in the aftermarket. So I'm specifically saying aftermarket. I'm specifically not saying pre-market. So the aftermarket hours, which is right now, it means nothing. We call that the Asian session because Asian markets are open. But the pre-market is the London session for you futures traders out there. The pre-market matters. The pre-market is truth. So in addition to my prior day high-low, I also need to have my London session high-low, or the pre-market. Pre-market
How
open.
much do you look at the overseas markets?
I just look at it in terms of what I'm saying right now. But like, I don't need to go in depth. All I need to know is the trend, right? And so when I'm outlining this, I need to know, am I above yesterday's high or not? Am I above the London session high or not? If I'm above yesterday's high and I'm above the London session high, it's very likely that we're going to go up. And in simplest forms, that's it. That's literally my trend. And I just then have to pick my specific entry point, which was what we call a trigger. And I have to do that within the first 2.5. Actually, I need to be out. If I'm a day trader, I want to be out within the first 2.5 hours. It's pretty very basic schedule. But if you can lock in one of these schedules, then you'll be able to trade. There's another session. We call this the AM session, and the PM session is the last 2.5 hours of the day. But in between, I don't really want to mess around because there's a bunch of whipsaw intraday reversals. The stock exchange guys, the brokers go to Nobu for lunch. All the volume dies out. All kinds of weird stuff happens. Kind of anything can happen. It's low volume, but it's not going to give me a real trend. And to trade, thing about trading is that I want to be in and I want to be out. A day trader, as opposed to an investor and or a swing trader, which I'm a swing trader actually. But
so that's what I wanted to ask. I just have a few questions. So the first question is, if you're when you are personally trading, how long do you leave a trade on for? 15 minutes?
No.
An hour? The whole day? Do you ever leave a session with a trade still having exposure?
Absolutely, because
Yeah.
I started as an investor. What makes me different from most traders is that most traders are very quick.
I've heard
I'm not.
that traders do not leave the day with positions. They leave the day with cash. Down or up, they leave the cash and start again in the morning.
So the big misconception about traders is that people think like traders are like, you know, hypey, ADD, rampage guys screaming and yelling with their faces glued to the charts like all day. There are some like that, but that's not all types of traders. You categorize traders by exactly your question, what we call time and market. And so there are 4 categories of traders. First type of trader, the ones that you guys are, that most people think of, we call them scalpers. They're in the market like click, click, right? Like that kind of fast. Like they can be that kind of fast. That's what sub 5 minutes type trader. We call that a scalper. If I'm, you know, good analogy is like surfing.
I mean, they're looking to get 10 bips off of something, right?
Yeah, because they're using massive amount of leverage. So like investing is like leverage, right?
All right. So not leverage. To make scalping work, how much money would you have to use?
It doesn't matter. You're going to be successful whether you start with $100 or
all right, let me
$100,000.
rephrase that. All right, I asked the question incorrectly. In order to scalp and make a profit of 500 to $1,000 a day, or lose, I mean, forget about lose because you could lose your shirt. I get that.
Depending on your vehicle.
You need to.
I say vehicle. Vehicle means like the asset class that you're trading, meaning like whether it's futures, options, or equity. Those are 3 vehicles.
So equity, because I'm not looking to start with options.
Oh, equity?
Yeah.
Equity, you're probably a 500 share trader at that point. So whatever it is that you're, 500 to 1,000 share trader, and you'd want to find, because you can't really do that with SPY, right? You can. So if you told me options, I would tell you $250.
Yeah, that's not what I'm looking to do. I'm looking, and the reason I say equity, not options, is because
look at Kensington, 4 types of traders: the winners, the losers, the dreamers, and the back holders.
For me, I want to learn how to do this on something that I'm comfortable with the knowledge that I would feel fine owning. So I would start trading on Nvidia or Amazon.
So first of all, you can't do that. So that would be starting off on the wrong foot, because you have to separate these 2 things. Trading and investing is like oil and vinegar. Like, I go to the Olive Garden, Amit's favorite restaurant, and they give me salad. It's got oil and vinegar. They can mix for a little while, but like if I tried to emulsify them in a shaker, like they'll mix for a little bit, but eventually they have to go their separate ways. And if you don't have that core basic first understanding that these are 2 complementary but not the same things, like you're going to get stuck in a trade that turns into an investment. And if you're leaving that door open out of the gate, you're already setting yourself up for failure.
So pick something I don't want to own.
Probably. Yeah. Probably a great idea. Probably a great idea.
I guess I'm going to go with something like Oracle then, as I kind of don't want to own it.
I love it. Right. I love it. It's been the short that keeps paying, right? Like it has a little bounce right now, 160, just came off 140. I mean, it's probably a solid target to go to the downside back to that 140. And so then you run your simulation, right? So if you want to then you have to know, okay, what does Oracle move on an average day? What's realistic for me to expect out of Oracle? 2.5% to 5% is a pretty big day on Oracle. So at 160 right now, you could tell I'm actually actively trading this stupid thing because I know exactly how much it's worth. At 160, that's $8. So a 5% move, which is a big day for Oracle, but it's actually been moving 5% a day, like regularly. That's $8. So how many shares do I need to own or trade long and or short to make my $500 a day? That's how you get your starting capital.
Gotcha.
That math.
Okay.
But that is actual work, right? People think, oh, I could just jump into it without thinking about these things. No. You have to have everything is planned and calculated. We need more Steve and Jason stream. This is fun. But okay, 4 types of traders, just to cap off. If they're surfers, think big wave surfers, small wave surfers, and we call like what's the like shore break surfers and like grovelers. So there's like, you know, the surfers that just hit the quick in and out, and then like
Which one's the Bodhisattva?
Yeah, they're like running in, running out, running in, running out. They're exhausted because they're paddling in all the time and they're catching like a really small break and then they're done. But they're doing it 20 times a day, right? Those are the scalpers. They're in like great shape, but they're done by the end of the day. Then you have like your power surfers, if you will, the ones that are like, I want a couple decent sets and I'm maybe going to get 2 or 3 sets a day if I'm good. That's a day trader. Both of those types of traders, mental shift here, they do approach the market like a job, like a 9-to-5 job. I clock in, I clock out, and I walk off the beach and I'm off into the sunset, heading home to my wife and kids or to my dog or whatever. And I could give a shit about what's happening after I leave because it has nothing to do with me. I came in, I used the market like my ATM, and then I'm out of there, right? Because they do not want any overnight exposure, to your point. The other 2 types of surfers would be like your big wave surfers and your like huge pipe surfers, the one like you're searching for like the big kahuna, massive, you know, liquid wall, whatever that's going to come at you. And that you're sitting there for a while and you're waiting for the perfect set and you're going to ride that one for a while. So that surfer, that trader is what we call a swing trader. That's usually a week or more in their time horizon. They want to be in a trade, a big trade. They want to catch a big move for a week or more. That's actually my style. 3 to 5 days minimum is ideal. And then there's what we call position traders that are like once in a lifetime swell. They're not taking a lot of trades at all. But when they do, it's like, I'm fully committed. Right. But there's like they're dropping in on jet skis and they're going like big waves, but they don't get a lot. Right. So it's very different mindsets. These are all traders. Every single one of those surfers are experts in reading the currents, the tides, the waves, and every one of them have the very specific skill set of being able to get onto the wave, ride the wave, and get off before wiping out. So that is, I need to have a planned entry, a planned management, like how am I going to manage while I'm on the wave? And then when am I getting off? Meaning I have to have a sell target. So each one of those things must be planned out before the trader gets on the wave. And so those are hard requirements for trading. Most people don't have half of that, which is why they end up failing.
Okay.
Someone asked me thoughts on Elliott waves. You're gonna laugh. There was one, I learned something super important about Ralph Nelson Elliott, the creator of Elliott waves. And that is that he died bankrupt. And that was the most important thing I ever had to learn about Elliott waves. So that's all you need to know. But no, they're super complicated and not worth your time, especially not in any not in any like serious sense.
Well, I'm getting a lot of freaking ideas at this point. A lot of ideas run through my mind.
Yeah, so you can do this, but it's you know, whenever you do anything, it's 90% prep work, 10% execution, maybe 80% prep work, 20% execution. It's very much the same way. So if you can prep it, and you know, we have a server or trading community, like people see my trades, like day trades and swing trades, because I do both. When the market is has the right conditions, which is not right now, you can, well, it was for going short, but like when you see the right setups, when you see the right sets coming in as a surfer, you get on the wave and you get off. Right now, we just got off of a wave. So now from that perspective, as a swing trader, it's like, now I need to wait for the next set to roll in. What I've been kind of trying to say is that it's probably not going to come in this week. It might be a lot of random choppiness, maybe some riptides, but a big wave is on the horizon, and that's the one that I really want to catch. Fuck it. Too much work.
No. They're basically saying I'm going to quit my fucking job and just do this.
Oh, well, I feel like you've already started. Did you not have a family?
I do not have kids.
You don't have kids, and wifey's asleep. Or dude, it's 7:40 my time right now. It's what is that? 10:40 your time.
Yep.
I'm so bummed I missed the New York meetup. By the way,
Oh, it was sick.
I thought about it. I was like, I should have just caught a red eye on the way back. Like, I'm like, what an
You're on the
idiot.
West Coast, right?
Yeah, I would have just caught a red eye and then back to,
Well, I'm coming to the LA meetup.
Oh, okay. I'll be there. I'll be there.
I am. I already booked the hotel. I gotta get a plane ticket, but I'm coming.
Yeah, I should have come, dude. Next time, New York, I will be there. I don't care if it's
New York was fucking crazy.
Yeah, New York, if it's I don't care. We'll go to Canada, but we might as well just I looked at this. I'm like, dude, I feel like Amit didn't want to really ask because it was like, oh, it's a lot for us to go out. But I'm like, dude, I could have just caught a red eye to come back home, and it would have been perfectly fine, to be honest.
No, LA is in a month and a half, so
yeah. No, so I will be in LA, that's for sure. I just don't know if we'll have a lot of swag, but or if he'll let me give away swag.
I'm doing LA, Chicago, Texas, Miami if he does it.
LA, Chicago, Texas, Miami. Okay.
Yeah.
Well, I would be down to go to all of them. I just felt like so dumb. Like after thinking, I was like, oh my God, I could have totally come back. It's like, I don't need a hotel. I'll just fly in, hang out for the night, and then catch a red eye out of the gate.
Yeah, I mean, you could have flew right into Newark and then right out of Newark.
That's what I'm saying.
Yeah. Next time. I mean, he's going to do it in New York again.
Yeah. It was, Amit, you could stay at my place. I'm like, bro, I'm not trying to. You have a party.
Dude, his place was the place to be.
I mean, that's what I say. It's like, he's going to be partying all night, man. I'm like, I'm going to wake up first thing in the morning. I'm going to be trading. So, I don't know what to tell you.
Oh, the futures are up.
Yeah, well, 6:30 or what is that? 9:30 your time. We're gonna get NFP, so this is all gonna be noise.
Yeah, Nasdaq's up 0.5%. It's up 133.
Yeah, we'll wait till 9 when we get the data. That's gonna change everything.
Oh, you mean tomorrow?
Yeah, because this is after hours. Nothing but lies and deceit for you. Free market matters. Free market matters. I don't know, man. What's up with these NFP numbers? Anyways, we're talking 45K expected right now. I'm so used to 200 something thousand jobs being taken every month forever. And who was on CNBC today was like, oh, we have to get accustomed to these new NFP numbers because it's gonna be shit forever. But yeah, I don't know. And then back to back, we have CPI. So in terms of the trend, honestly, the next 3 days probably don't matter. It's probably going to be day trader's paradise. Do you want to trade? Come by. We'll show you how. What are we rolling with?
Cloudflare just freaking murdered earnings day. They're up 16% after hours. Jesus Christ.
Nice. You see Datadog. So there are some.
What do they do?
It's about the same. So there are some software names that we're getting absolutely hammered. Maybe Shopify does the same kind of thing, but ripped right off the report. But it's the same concept of okay, so yesterday we got the high on Datadog. Watch it, right? You get one shot, it must make a new high. And that new high on Datadog is that after hour that it's 137. Yeah, 137. If it can't get over 137 or it doesn't close the week over 137, that's probably it. And it goes into a holding pattern.
Yeah, I tried catching ServiceNow. And I think my average, I bought it once. I bought it at I think 111 or 112.
That's
I
probably
thought I was
really
catching
good
the
stock.
bottom.
That's probably a really good stock to start with. But as a trader, if you could actually not fall in love with it, because the problem after listening to you is that you like ServiceNow.
I think that this whole SaaS
draw
thing
down
is
your back.
ridiculous. There's two SaaS companies that I think are ripe for a big swing to the upside, and it's ServiceNow and Salesforce.
I thought you were going to say Adobe and Salesforce.
So Adobe's the one. Adobe makes the most sense from a numbers and evaluation standpoint.
Yeah.
Adobe scares the shit out of me because that is not my area of expertise. I do not do anything with marketing, graphic design, any of that stuff. And I feel like there may or may not be a lot of disruption for people who only pay for the Premiere Suite for just low-hanging fruit to do something that AI may be able to do. Whereas Salesforce enterprise level software, you're not getting rid of it. ServiceNow, IT departments are not getting rid of it.
I don't know that Premiere's like real Premiere, video editing Premiere is going anywhere, but I also don't know.
I don't use that stuff enough to know one way or another.
I don't think it's growing, right? And like where they would instantly go Premiere, probably people will try 10, 15 different AI softwares first for cheaper before they finally break down and say, okay, we'll go to Premiere. So that we'll probably see the numbers. But any of those, either one of those, I have to agree that we could get like a face ripping bounce on both of those. I mean, we're talking 50% bounce or more, but they still might be shorts at the end of the day because they're just so bloody red. Or like you look at those, I can look at the charts and like everybody's already given up. Like they've already given.
I mean, I'm not going to use TradingView.
Yeah, 50%.
Look how bad that chart is.
So if CRM, this is ServiceNow. Go to see.
Look how bad ServiceNow is.
Okay, but that's my point. It's $100, right? If ServiceNow bounced 50%, let's say it's at 150.
Yeah,
that's the problem. 50% bounce, you're still not really out of the weeds.
That's all I need, though.
No, for a trader, yeah. But you got to wait for that to kind of rest and phase out and then go. CRM, $200. Like 50% bounce gets you to 300. Show a 5-year on that. That ugly.
Yeah. It's freaking ugly.
Yeah.
So and it's not even as worse as it can be. This thing in 23 was freaking horrible.
I know. I feel like it wants to show me 150, and I'm like, oh my God.
It wants to, but the numbers don't make sense. It's trading at 16.5 times this year's earnings. This thing does 13 billion of free cash flow.
Well,
it buys back 9 billion in stock a year.
It's exactly your point. It's the free cash flow. It's like the market is questioning how dependable is that free cash flow, because that free cash flow is exactly why like CRM has held its status for so long.
Nobody's believing the October Investor Day from Benioff, where he put out guidance to 2030 saying that they're going to grow to 60 billion revenue.
Yeah, I mean, it's the Costco thing, right? Costco and Walmart, cash flow market gives them the premium because they think it's dependable. Apple, they think it's dependable. They'll always trade at a premium. And Salesforce has been the same way forever until it came into question. And the second it came into question of whether or not that cash flow is really dependable.
Here's the crazy thing, though.
That's what we're seeing.
They're about to report. So I hate when companies don't report on a fucking calendar year, because Jan 26 makes it seem like it's fiscal year 26, where it's really not.
Yeah.
This is really the fiscal year 26. 56 analysts have a midpoint of 11.5% EPS growth. And then for 27, 36 analysts have a midpoint of 14.5%. That's accelerating EPS growth by a lot of analysts. And then you look at revenue. Once again, 55 analysts, 11% EPS revenue, and then 9. And even the analyst community has them, 6 of them have a midpoint at 60 billion, right where Benioff's pegging it. I mean, The analyst community, at least in the short term, does not believe this is getting eroded.
What is that like in the past? Like, can you show me like the past? Like you're going forward. So
Yeah,
like,
on Seeking Alpha, I can't show you the past.
oh,
I could build it in a model. I mean,
no, I mean, there's other tools, but I think that's the question. Like in the past, it was probably higher than that. And so it's just coming backwards. You know, if you had TradingView, it would show you this. But anyways,
well, luckily,
although TradingView is not dependable for financials, I'll just do that. I'll just say that. But yeah, it's just the question is, the market is saying like, how dependable is the cash flow? Do we believe it still? And so right now it's in question, and that's all.
where's Tevis to make fun of the fact I'm doing a spreadsheet again?
Well, at least you're using Excel and not Google Sheets. That just
I'm
shows
using
everybody.
Google Sheets because it was open.
You're using Excel, dude. I'm looking at Excel.
No, I'm using Google Sheets.
That's not Google Sheets.
Yes, it is Google Sheets. It's 100% Google Sheets.
Is it? Oh my God.
Only because it was open in a tab. It was the quickest thing.
It's Google Sheets. We're gonna give you credit for being corporate using Excel, but no.
I love Excel. Okay. So this is 2016. Honestly, I like Google Sheets better for this because the command.
Yeah, so exactly
are a little
that.
better.
Look at that. So it was 26%. Now you're coming backwards. So yeah, it's still 9, 10, 11% growth, but it's not where it was. And now at this point, they're starting to be like, well, how dependable is the cash flow?
So the analyst community is expecting that this year is going to be 41.4.
What a loser, dude. I don't even know Google Sheets.
So, yeah. And remember, so I really should put this like that. I should really do this because this is really the 25 fiscal year and put 2015 there. But
yeah, I don't think that matters. It matters the rate of deceleration.
It's deceleration. I mean, that's all it is. But when you look at where the analyst community has in the future, it's basically stabilizing, and you're going to grow 9 to 11% year over year now.
Okay, so show that one more time. So we see this, and then if we okay, well, you could do that too.
Yeah, I'll just build it.
So I think it went to 2033 or something like that.
Yeah, it did.
And it was still, what was it? What was the max at 2033 or 12%? I think the question is like, if you're an investor, it's like, do you believe that long-term number? Because the market's always looking forward 2 to 3 years. So it doesn't care about what you did today. It doesn't care about what you did yesterday. It only cares about what you're going to do 2 to 3 years from now. Anything beyond that is a little speculative, but 2 to 3 years from now, forward-looking vehicle.
Yeah, I don't like going too far out because only 6 analysts are on this line, so I don't feel comfortable really even going that far out.
Are they shady? Do you know them?
But they're, they're saying this is going to stay high single digit, low double digit for the next several years.
And I think therein lies so the premium gets lost, but I don't think the bottom falls out until all of a sudden, boom, Benioff or whoever gives them a new reason to have the premium, which if you believe in the company long term, it'll eventually come back. And that right there is the investing thesis. But between now and then, can it go lower? For sure.
Well, anything can go lower. The big thing is that when you look at their cash flow statement and you look at their investor day report, they're going to spend 99% of their free cash flow allocating it back to shareholders. And I'm going to bring up the cash flow statement. I mean, and this is why I think Salesforce is so undervalued, because from an enterprise standpoint, companies are
my crew knows. I've tried to take so many shots at Salesforce. Like it's just got like I won a couple, but like instantly you got a report. I don't want it to go red. I'm like, oh my God. Like really?
So look at this. In the trailing 12, they've repurchased $8.87 billion in buybacks. and they paid out 1.6 billion in dividends.
Yeah.
They're buying back so many freaking shares. Their free cash flow is 12.9 billion. And when you look at the balance sheet, this is a company that has just over 11 billion in cash on hand. They have 6.4 billion long-term investments, and then long-term debt 8.5. They have more cash on hand short-term than debt.
Yeah.
So
No, I don't think any of this is in question, right? So it's like, so investing has to be a minimum of 3 to 5 year time horizon, right? Like I think that's that. Otherwise-
it's
otherwise
until
we're
the
trading.
narrative about this. So the problem is nobody can prove or disprove if AI is going to eat Salesforce's lunch or ServiceNow's lunch. It's all hypothetical. Like
Yeah.
we need some type of inflection point to either show that these companies are going to live and die with adding agents in and adding a component of AI, and they're going to be able to continue to grow.
That's the whole
even if
market.
there is a loss of jobs, because typically these companies charge by the seat.
Yeah, no, but that's the entire market right now because
Yeah.
it's even the debasement trade, right? All of that goes back to that. It's like the question is across the market, does it pay off for these agents, right? For the software and all that. And if and when it does, it's might not even be an if, but more like a when. And that is the question across the board, right?
Well, here's
Like-
where I'm getting annoyed. People don't understand how IT departments work,
I
and they
come
don't
from IT.
understand that these companies could come out with agents, but that doesn't mean that IT departments are going to pay for them. That's an upcharge. Some of them may not want to pay for it. Like,
Yeah, and
that's
they're
not
not
a guarantee.
You're not going to build it in-house either, quite frankly, because like to build it in-house, that takes on a lot of responsibility. And
Well,
and
it's just like what I said the other day. I mean, you look at a company like CrowdStrike. Technically, that's a SaaS product. Now, CrowdStrike got absolutely killed and caught up in this. But I'm sorry, Johnny B in IT utilizing Claude and Claude, whatever the hell it is not
not gonna replace
building a
Uh-uh.
freaking security product and then going to their
anything
CIO and
in
saying,
security is not getting replaced by AI. Nothing
No.
in security is getting replaced.
no,
Any
no,
security.
no CIO or C-suite is going to say, "Oh, cool, our IT devs team just built an in-house thing on Claude. Let's save money and get rid of freaking CrowdStrike." Nobody ever said that.
Could you imagine?
Oh, you mean all of our HR records with all of our social security numbers and everybody's bank account with direct deposit? We're
Yeah.
going to leave that to a homegrown product that Johnny B just did? Like,
No.
come on.
Not
That's
happening.
not happening.
Yeah, usually Palo Alto. Palo Alto's best to breed in Palo Alto's network security, right? CrowdStrike is like client-based security, or like at the endpoint, like on
There's
your
a
actual
couple of
computer.
really high quality companies in
You know
this
my
area
background,
that
right?
do really good. What?
I don't know your background, but do you know mine or no?
No.
Oh, I come from enterprise IT. Like that's what I did in the Valley here but not as an engineer, but like as a, what would you call this? So I was an integrator, and companies would come to us. Like my biggest customers were like Uber, DoorDash, Robinhood,
Yep.
and we built the infrastructure. And so like, here's the problem. What technologies do we need? What technologies do we have to put together to build the solution? And how do we, like a technology evangelist, if you will, like a reseller. But the job was to know what tech solves what problem, which does best, which isn't, and how to apply them in a business scenario. And we would just meet with CIOs, CTOs, and et cetera. But that was like literally for, I want to say 10 years before trading. There's like transition in between when I was like, we're just going to go. But yeah,
I mean,
that's,
you have an inside understanding of how the departments work. I have an understanding. I'll tell you offline what I do. I have a very inside understanding of how this works. And I really adamantly believe there is going to be consolidation. There will be smaller companies that get impacted, absolutely. But these
Like SentinelOne.
enterprise scale companies, I do not think are going to get impacted. I really don't.
Yeah. I mean, your Fortinet might do well. It's always been
Fortinet's an interesting one.
but so Fortinet's not better than Palo Alto, but it's when I would sell it, it's always a cheaper product. If you needed a cheaper alternative, this actually might be really good for Fortinet. And if you needed a cheaper alternative to like Palo Alto Networks, enter Fortinet. That's
so
really
how much do you pay attention to Fortinet these days with their AI security platform? Not just the hardware.
No, like, so Fortinet is network security. So I don't know what part of security they're trying to do. It's like Cloudflare tried to do firewalls also. Epic failure, never going to happen. But like there is a certain company that try to do certain things. I just know Fortinet from like working with them and Palo Alto and whoever. But
so I have a theory that somebody like an Arista Networks is going to acquire Fortinet because they're going to look at Cisco and they're going to say, wow, Cisco vertically integrated their business. Not only do they have the hardware, but they have their Cisco umbrella product. They have their...
Well, it could just be Cisco that buys Fortinet because Cisco's not...
That too. Either one. I just think that Arista is going to need
to
do something.
Cisco's a switching company, right? Like it's...
Well, they've become 50-50. Now they are a subscription business too.
Yeah, but Cisco is notoriously bad firewalls. And like...
That depends who you ask, though. People love their Meraki products.
Chat will tell me. But, well, they have
People love their Meraki products.
Meraki's different. That's not... That's wireless. So wireless is...
No. Meraki is full firewall, switches, everything.
Okay, so nobody in the enterprise is going to use a Meraki firewall. I'll tell you that. The switches, APs, access points, all day long. You remember HP bought Aruba, their competitor at the time. Like that was it was Meraki and Aruba. Oh my God, was Aruba? It was clear.
People like Ubiquity also.
Huh?
People like Ubiquity also.
That's more retail stuff. Like I have Ubiquity at my house. More SMB, but like enterprise, it's Palo Alto and CrowdStrike. They buy both.
Yeah, Palo Alto and CrowdStrike are the two big ones. I mean,
or
Cisco's break. I'm telling you, Cisco's going past 100. Cisco finally is at all-time highs after 2.5 decades.
I believe it.
And
Cisco, I love Arista too. By the way, like every like point of presence that we built, it was always Arista. We stood up the Hulu infrastructure back down in Santa Monica where we're going. But yeah. I mean, Cisco is a staple. It's like that cash flow is dependable, actually. Yeah. Cisco cash flow, dependable.
Do you follow their underlying business, what they've been doing?
I mean,
so they've diversified away from being dependent on networks for 100%. Networking is their Trojan horse now. All their products have subscriptions where you need it to actually run the products, and then they have the security layers on top of Umbrella and these other products. I mean, it's something 48% of the revenue comes from reoccurring revenue services.
No, I get it, right? But the problem is that Cisco is not inherently a security company.
No, they're not. Well, they're trying to be now, but they're still looked at as a networking company, even though they have security products.
Yeah, exactly. So they have security products, but that's not their bread and butter, right? Their bread and butter is switching, networking, routing. Sorry, they're routing. But yeah, these other pieces, dude, we would sell multi-million-dollar Palo Alto firewalls, just like 2 boxes, $2 million. You're like, oh my God. And 80% of it was software subscriptions. Like, it's crazy. And
it's a crazy business. And it's only going to get bigger.
Yeah. Zscaler was the one when I was leaving that was like up and comer. And I think they did pretty good, but they're a direct competitor to Palo Alto, but I don't know that they're going to take them out or not. But that would be the only one that I would say is like a real challenger to Palo Alto is Zscaler.
Or at least I don't follow Zscaler enough.
Well, they're cloud native, like which was different, like virtual firewall type stuff, which is very different. But anyways, it's
Yeah,
all
so-
it's all tech stuff.
Moral of the story is enterprise SaaS stuff is probably not getting disrupted through
Security
homegrown AI.
specifically.
Yeah.
My dad was the director of IT for the FAA, and my mom was his engineer from Motorola. So that's how far back we're going.
Wow.
But that's how they met. And when I was growing up, he was always like, just get into security, because it's never going anywhere. It's the most secure place that you could always go. And I was like, oh, I don't know. I didn't go that way, but yeah, security, InfoSec specifically is like the most dependable. Look, think about it this way, guys. If you're cutting costs left and right in a large scale enterprise, what's the very last thing that you're going to pull the plug on?
Oh, it's called cybersecurity because it's more expensive to deal with lawsuits. That's why.
Yeah. You're not pulling the security plug. That's
No.
not happening.
No, not at all.
All right, man. Well, this was fun,
I'm
dude.
gonna let you go. Thank you so much for coming on.
Yeah,
I need to
caught me at a good time.
freaking do TA more seriously.
Hey, we're here whenever. Most of the time. Although,
All right,
as
and I
long
will
as
see
as
you in
long
a
as
month
you
and a
know my
half
work
out in
area.
LA.
Yes. Wait, who else is coming to LA?
Amit's going, I'm going, Dougie's going, Michelle and Ray are going, June is going, I think Spencer's going, Austin's going. There's a bunch of people.
We need Maddie.
Matt can't
You're
make it.
going.
Matt can't. He can't. I tried to get him to change some plans. He can't go. What I'm gonna need to know, I need to know where there's a good steakhouse near the hotel.
Okay. Can you pull up? So before we go, last thing. I know I keep saying one more thing. Can you pull up the invite for Amit's? Or do you have it?
Yes, I can. He puts it in his show notes, so just give me a sec.
And you got to screen share this. I was like, where are we going? You're not screen sharing yet.
Yep, I'm sharing it now. All right, the Amit Community Meetup LA.
Yeah. Look at this guy. Zoom down. Or scroll down. Sorry. Zoom down. Scroll down.
Show map.
Show map. Expand it. Zoom in. Little more. Little more.
Not letting me go anymore.
Really?
Yeah.
Dude.
Why?
Okay. Because that blue dot is an Olive Garden. Well, no way, dude.
Okay. I'm gonna ask again. Where is there a good steakhouse near here that I don't have to deal with traffic?
Oh wait, there it is. The Olive Garden. See that? It's yellow.
Here?
Yeah.
Yeah. I'm not going to Olive Garden. I'm sorry.
I mean, what if that's where he's sending us?
Well,
So
I'm gonna look at those.
I just want to know if we're going to the Olive Garden.
We went on an executive retreat with about 20 of us. Okay. They made reservations at this freaking Michelin star freaking Asian fusion place. I walk in, there's no TVs at the bar, and it's the first day of baseball. I'm like, what are we doing?
Michelin star, dude. You're talking like 3-4 hour meal.
So I left. I went to the Palm and ate freaking at the bar watching the Dodgers game by myself. I left all my coworkers.
So, I don't know. We'll find out. This is actually a pretty good area. Like it's business kind of district here. Like there's a lot of like heavy businesses here.
So in all seriousness, how bad is the traffic over here? Because everybody says LA's traffic is horrible.
No, so this is like Santa Monica area. Like if you just slightly north of Santa Monica, it's if you're going from LAX to here, it's not
Yeah.
bad, right?
Okay.
But if you tried to get out of this little quarter-mile radius, you are fucked.
No, I don't need to get out of this quarter-mile radius. I just need a steakhouse.
No, yeah. Look at it's TikTok. There's like this is like business. There'll be something here for sure.
All right. So there's got to be a freaking Palm or Morton's or something.
There'll be
I'll
a
check this out.
Alexander's might be something that you'll see down there. I mean,
Okay.
steakhouse.
I'm
Yeah.
just gonna Google steakhouses.
You're gonna Yelp
Yeah.
steakhouse down there.
All right. Well, looking forward to seeing you out here.
Yeah, for sure. At the Olive Garden. Or
No,
is it the Sizzler? There's a
That's not.
Sizzler.
Neither of those are happening.
We don't know.
No. Trust me, I know they're not happening. They are not in my future.
I saw the map and I was like, that's the hotel. Closest thing is Olive Garden.
Right. Closest.
I know
thing.
that's-
That doesn't
that's a
necessarily
mid
mean
spot.
that is what's happening.
Yeah.
Okay. I will be doing research on this area. So much research.
Yeah. Yelp. They'll tell you.
All right. Well, thank
Cool.
you. Really appreciate it. This was great.
I'll see you soon, man.
Sounds good. Talk
Till
to you
next
later.
one. See you, gang. Adios.
Thank you.
Late.
All right, everyone. That was a treat. Really appreciate it. And I am not trolling. Listen, living in New York City, it's very hard for me to break down and get bad Italian food or bad pizza. I'm sorry. I'll say it like it is. I'm probably a snob like that. I am a foodie. I want what I want. That's all there is to it. Anyway, if you're from Clover City, please send me a list of restaurants to go to, and I will do some research, and I will look at it. Appreciate it. Hopefully everybody enjoyed it. Jason's freaking awesome. He does a wonderful job on Technical Tuesdays. Really appreciative that he came on tonight. Please go follow him. I'm probably going to be taking TA a little bit more seriously and go from there. So tomorrow night, Tanner and I will be live probably around 8 o'clock. I'll text with him during the day and then we will figure it out. There does not need to be a Peter Luger in LA because Peter Luger is overrated, in my opinion. Hold on. Did somebody just say there's a Ruth Chris? Ruth Chris is somewhat close. Perfect. That's where I'm going. Ruth Chris does not miss. I like the way that they cook in the butter. All good. Perfect. Yeah, I'm going to talk to Jason. Maybe I can get him on once a month or once every 2 months, a bi-weekly thing for an hour and a half, just to get me going on this. Have I ever had a smoked ribeye steak reverse sear? I have not. Sounds delicious, though. Sounds delicious. Jacker, what have you been saying for 10 years? That Luger's is overrated? Same here. Same here. Yeah, Ruth Chris is, listen, Ruth Chris, the Palm, Morton's, they don't miss. Sorry. I mean, I know people want to say they're overrated. I'm not saying they're the greatest steakhouses ever, but they are so freaking consistent. They don't miss. I mean, truthfully, Morton's, out of all of them, I think is the most consistent. At least the Morton's I go to is the most consistent. Never misses. Oh, perfect. All right, Jason, thank you. And everybody, please go follow Jason. I'm going to put his Twitter in again. Give me a sec. So if you're not following Jason on X, please go follow him. And I'll try to get him back, put me through the ringer on the charts and everything, and I can show him what I've learned. So please go follow him on X. That'd be great. All right. I'm going to get going. Uzi, what are you talking about? Where are we going for lunch? What are you talking about? We're getting chicken parms tomorrow, aren't we? We'll figure it out. And we can pretty much go anywhere. So I just want to stay around the office. I'm not looking to get in an Uber. Yeah, let's just do Patsy's. It's a block away from the office. Yeah, chicken parms tomorrow. Nice. All right, Uzi, I will text you at like 12 tomorrow. Everyone else, appreciate you hanging out with us tonight. It's been fun. Got some more earnings tomorrow, and I will be back tomorrow night. And then Amit and I will be on Thursday, and I believe Little Birdie told me that the next episode of Basis Point is coming out on Thursday. And I watched it, and it's fire. So hopefully everybody enjoyed that. Good night, everyone. Really appreciate you being here. I will see you tomorrow. Have a great day. Oh, great night. It's no longer day. Should have known that it's dark out. Enjoy the rest of the night, everyone.